All right, guys. We are here today. We got the PCE inflation report going live right now. Let's see if we get anything good, man. Honestly, PCE inflation is an incredibly large report. Make sure this is screwed in all the way. There we go. PCE inflation, a very large report. Let me know if you can hear the music. Let me know if that's good. We're here. Yeah, so we're gonna put all the data up on screen. Yeah. Let me know how you guys are doing this morning. Are you guys green? I'm slightly green in one account. I think we might be red in the other account, so we're kind of back and forth. We've been shorting this price action mostly, honestly. The first trade I just kind of mismanaged. Hello, good sir. Let's have some bull hopium. Bull, good morning. I just put all my money into a beachfront property ETF. Hey, good luck. Morning. What's up? Messi, Marquez, Pawn, King, Rational. Yeah, let's take a look at some stocks this morning, huh? So we'll put this back up here. But Nvidia, still pretty down, honestly, but up a little bit over the last 3 hours or so. You can kind of see it's down on the day total for Nvidia. Nvidia is red on the day. It is red on the day, but it is up total here, you know, so like you can kind of see. Actually, it's not red on the day, I'm sorry. It pulled back relative to where it was at the close yesterday and then recently ripped back up. So it's now technically green on the day. The NASDAQ is slightly red under that 20K level. Been break it down a little bit. If we take a look at like Apple or you know, a lot of tech stocks are down this morning. Although Nvidia is green. So Nvidia is green. This all leads to next week. Doomsday, April 2nd. And yeah, we'll check out some of the biggest news stories of the day to see what's going on. So we had Italian producer prices coming at 6.2%. China's cabinet meeting approved action plan to speed up clearing overdue areas owed to COS. Again, the big story today is the PCE inflation report. Releases live here at 8:30 a.m. Eastern Standard Time. Expected at 2.7% year over year, 0.3% month over month. That is the report today. Again, 2.7% year over year is what they're expecting. Make this a little bit smaller so you guys can see it. Hold on, give me a second. I'm trying to stretch this out so you guys can actually see it. There we go. It's a little small, but let me make it a little bit larger here. Remember, the core PCE is the big one here. So the core PCE is the one like you want to tune into. You could watch the regular one, but the core PCE is the big one that probably is the most influential. Yeah, we did have higher GDP, slightly higher, but I think the market fears inflation, and that's why today's inflation report is even more important, because the market fears inflation. And so economic strength doesn't necessarily mean we're going to get good, like, bullish responses, right? So, like, economic strength doesn't necessarily mean good. What's up, Ray Womble? Esteban, Eric, Justin. I don't know if it's doomsday. It might honestly be good day. Like, honestly, if we come out and it's less severe, the market's already negatively reacted to the tariffs. The reason I say it's doomsday is because it's tariff day, and the market has pretty overwhelmingly negatively reacted to tariffs every time they say anything about it. And so with tariffs kicking in on that day, I would assume we get some negative action. But honestly, on the other side of that, we might not. We might get pretty bullish action ahead of this report. Honestly, we might get like really good bull action from this report if things come in more optimistic for that date. And so we'll see. We'll see. Who knows? What do you guys think? Do you guys think a good or bad reaction on April 2nd? First, we'll do a poll on PCE inflation. Do you think we get higher or lower core PCE inflation year over year today? It's expected at 2.7%. We'll make higher and lower. Again, do you think we get higher or lower PCE inflation data today? It's expected at 2.7%. 2.7%. What's up, Faye, Womble, Messi, Marquez, Axel, Ray, Eric, Justin, Beach Bum. Let's hope good news. Some are saying April 2nd will be our biggest green day. We'll see, man. Honestly, do y'all think we'll do a poll for that later on? Like, honestly, later on, we'll do a poll regarding April 2nd and what you guys think we're going to get. Whether you guys think we're going to get good action, bad action from April 2nd. I honestly, I'm not sure. It's not just April 2nd that's busy next week. I've said this many times. It's not just April 2nd that's busy next week. It's honestly a lot of different things. Right? Like, so not only is April 2nd busy, but we have the JOLTS report on Tuesday, I believe. April 2nd is Wednesday. Yeah, April 2nd is Wednesday. Not only do we have April 2nd, which is Wednesday, but we have, prior to that, we've got the JOLTS job opening report Tuesday, the day before April 2nd. We have non-farm employment change data on Wednesday coming out as well on April 2nd. We have Tesla delivery numbers that are also expected April 2nd, which also correlates with the tariffs that are happening on April 2nd as well. Thursday, we got jobless claims. I think we also have ISM manufacturing PMI data coming out next week as well at 10 a.m. on some of those days. Let me see exactly what it is. We have ISM manufacturing data next week on Thursday. So on Thursday, we got on April 1st, on Tuesday, April 1st, we have the JOLTS report and ISM manufacturing PMI data. Thursday, we have services, ISM services PMI. And then Friday, we have non-farm payrolls, unemployment. We got jobless claims also on Thursday. Trade deficit data also on Thursday. A bunch of different Fed speakers coming out. We got Kugler on Wednesday, Jefferson on Thursday, Cook on Thursday. Jerome Powell speaks on Friday next week as well. And so, yeah, busy next week. Let's see what that looks like, man. What's Jerome Powell doing speaking on next week? Let's see. He is speaking at the Society for Advancing Business Editing and Writing, SABEW. He's speaking on economic outlook for 11:25 a.m. Eastern Standard Time on Friday, April 4th. So, busy day. Busy day. We always get good news on data. Yeah, maybe. I don't know. I don't think it's predictable. I think we want the market to go up, obviously. I don't want the market to crash. We want the market to go up. but I don't think it's necessarily predictable. I think the Nasdaq's under 20,000 right now. Nvidia's under 115s, under 120s. A lot of tech stocks are down. The Nasdaq's down. Apple's down today. We got Meta that's slightly down. We can take a look at like Google, which is down a little bit on the day. A lot of stuff's flat as well. Netflix is basically flat overnight. Palantir is under $90 a share, so it's down over the last few days. Bitcoin's down. Bitcoin's sitting at 85,000 right now, 85.3 thousand or so as I speak. So Bitcoin down. Gold still at all-time highs, broke all-time highs again yesterday, got up to 3120s in all-time highs yesterday. 3120s for all-time highs is now at 3112. 3112, so well over 3K now, broke those 3,000 highs. And again, maybe I should have bought it. Maybe I was wrong about gold. It's just one of those situations where I like to buy gold when it's downtrending, not really when it's uptrending, because there's too big of a chance that it's going to downtrend long-term for me sitting on it. And so I'd much rather buy it during a downtrend, kind of DCA into it, than buy it when it's ripping up, breaking highs. And that's just me. Maybe I'm wrong about that. Maybe that's the wrong mentality to have. But yeah, gold's pumping up. Gold is up to 3120s right now, guys. 3120s. And so, yeah, we'll see. And, yeah, looking at the markets right now, guys. Looking at the markets here. NASDAQ is right under a pretty big level, right? The reason I'm making myself big is so I can point to this. The NASDAQ is right under a pretty big level. The $20,000 level, which is that light blue line up here. That light blue line up here is a very, very, very important level. 20K is a big freaking level. Like 20,000 is a huge level. It's a level you want to watch. It's a level you want to pay attention to. It's a milestone level that other people are paying attention to. And so $20,000 on the NQ is a spot to watch. It's a spot to watch. And I know I'm wearing white t-shirts every day. I got a whole bundle of white t-shirts is why. And so if you see me wearing white t-shirts, it's not the same shirt. I'm switching shirts every day. And so not wearing the same shirt every day. It's just a bundle of white shirts. I don't think the major businesses care about high inflation because it gives them opportunity to increase their prices, but they do want lower interest rates. Yeah, that's true. And when we take a look at the actual interest rate outlook for now, and this is one of the reasons you want to pay attention to what Jerome Powell says. If you take a look at this stuff, still 88% chance of a pause in May is what this is looking like. An 88% chance of a pause in May, a 12% chance of a cut. If we look into June, that pivots to almost 60% chance of a cut in June. So they're still thinking June is the month we're going to cut rates, with a 60% chance of a cut in June. There's also a 7% chance of 50 basis points getting cut by this June meeting. A 7% chance of a 50 basis point dip in interest rates happening, which is a 0.5%. So we'll see. We'll see. Still looking pretty unlikely that we're going to cut anytime soon. But if we get low inflation data today, if we get weak economics and low inflation data, that sentiment might change. The only way the interest rate sentiment is going to change is if inflation is under control and we also get weak economic data. Because if inflation's under control, it means we can cut rates with less fear of inflation. And if we have economic weakness, that's one of the justifications, like, hey, it might be time to cut rates a little bit more. Now we'll see, but that's kind of what we're looking at now. Contrarian take, but I think the market wants inflation. Eventually money is absorbed by the top anyway. I think the market wants to know how we are going to put money in the hands of, maybe. Market didn't like 30 minutes before close statement from Canada and Japan. My puts doubled. Mexico cut the rates. June we get a cut for sure. I would rather wear the same color shirts. Simple, no more thinking. Yeah, honestly, that's my take. I bought a bunch of white t-shirts. And honestly, I like white t-shirts anyway. But they're easier as well, for sure. So the EU is going to invest $1.4 billion in AI. and digital cybersecurity sales. So the European Commission will invest 1.3 billion euros, 1.4 billion in AI, cybersecurity and digital skills through the Digital Europe program for 25 and 27. It said in a statement on Friday, they said, quote, securing European tech sovereignty starts with investing in advanced tech and making it possible for people to improve their digital competencies. End quote. And this is from the European Commission digital chief, Henna Verkunnen. Yeah, so we'll see. AI, more investments, AI. We'll see what that looks like. But yeah. Yeah, I'm watching some other stuff too. Gold creeping back up over the last 20 minutes or so. Nasdaq's still pretty down here. And honestly, I've been shorting most of the morning. Like, if you look at my trading, I started shorting right around here, and we ended up breaking down, and now we're kind of back up. We kind of have an inverse head and shoulders here, but this is not quite the angle you want. I think it just kind of looks like a downward trend. So we're waiting on that to see what that looks like. How's the music sound? Music should be pretty good, right? What's up, Pascal? All right, guys. Yeah, so gold's still creeping up. Man, you know one of the stocks that is down a lot? GameStop, dude. GameStop is down a huge amount. A huge amount. Why are so many Fed speakers? They all say the same thing over and over again. Yeah. Yeah. We're just gonna ban. You know how yesterday when I was like, hey, this person is probably the same person because they sprouted up and like they sprouted up right when I banned the other guy, and then all of a sudden the only thing they want to talk about is like something critical. Like it's just weird, man. So we're just gonna go ahead and ban them. They're just strange. Again, like you gotta wonder why people spend their life doing it. Like yeah, I might comment on it every now and then, but I certainly don't comment on it enough to justify like just being that desperate. So good day to you. Yeah, GameStop down to 22. Got brutal from their earnings. Let's take a look at it. Like, look, here's GameStop on the right side. They're down to 22. Look at that drop, man. Wow. Down to 22.17s. Yeah, I must have really hurt them in some way. Like, I really must have, man. Because, you know, the drive it takes to get up every morning at 6 a.m. and create fake accounts and troll somebody. Like, I feel for them. I really do. I genuinely do, you know. One thing I'm going to teach my kids not to be like is these people, you know. Yeah, GameStop getting punched down, man. Which is weird because, you know, they went up a lot. They're lower than they were pre-earnings. Pre-earnings, GameStop was like 26, 27. And And so they're lower than they were pre-earnings. You got to wonder why. Some people are saying shorts are attacking them. I don't know if what do you guys think? Do you guys think shorts are attacking GameStop? I'm researching this. So Peter Schiff slammed GameStop's Bitcoin strategy as shares plummet. He said, quote, "Now that all the fools have already rushed in, smarter investors are selling," end quote. I'm not saying I agree with that. Don't get mad at me, traders. I'm not saying I agree with it, but yeah, strange. Bitcoin and XRP prices fall, how cryptos look to set to end a volatile week. Rising uncertainty in crypto markets in the first quarter led to increased market volatility. Subsequent downward prices. Yeah, Bitcoin down too, man. And look at the NASDAQ fall here. So the NASDAQ is still coming down some. We'll see how far it comes, but looking weak. GameStop should make their own games instead of buying Bitcoin. Yeah, I got you guys here. Let me put a timer up. I forgot about the timer. Here, I got you. Hold on. Where is my timer? There it is. There we go. We got about an hour. Keep calling Bitcoin has strong support at $1. Yeah, maybe. NASDAQ pissing me off. Who got banned? Nobody important. Same troll that's been, trolling me every morning. Like, usually it's kind of early. So, whoever it is, I must have really hurt him. I feel for him, man. GameStop at 22s though, man. Hey, again, do y'all think GameStop bounces back here? What's the future of GameStop business look like? So if you think GameStop is going to bounce back, what do you think the future of that business looks like? I think because for me, it's hard to think about the future of GameStop that doesn't require deep, you got to close a bunch of stores, and they're already doing that. You got to improve margins, and they're already doing that too. But what does the future of GameStop look like? I don't think it's a situation in which you can have a GameStop around every corner like we saw in the mid to late 2000s. I just don't think we have that situation with GameStop. I think even with the updates, with the changes, you don't need that many stores. It's just a bad decision business-wise. Open up that many stores, bad for margins. It's too steep of a, standard. It requires too much success that they don't necessarily have. And I think, yeah, we'll see. Wouldn't touch it personally. Safe to assume PCE comes above estimates, so it's bullish. Maybe. GameStop going out of business. Yeah. You don't think the stock market is very overvalued, and at some point we will see a Great Depression? I don't know, man. I think I told people this before. In December, after this big rally where markets were at all-time highs and the NASDAQ was up 105%, I told people the market needed to correct. That was my thesis. The market needed to correct. I thought it would correct sometime in the next year. And then, of course, in February, we got this big correction. Now, whether the market's overvalued now is a different thing, though. So when we take a look at the NASDAQ, here is a weekly chart on the NQ. Whether you think the market's overvalued now, I think it's hard to tell. It's hard to tell. I think PE ratios are still very high in most of the Mag 7 stocks. I still think the market would be okay if it pulled back more. But I also don't think the market has to pull back, and I think the long-term edge in markets is that markets are going to go up long-term. And that type of nuance is just going to continue, and that markets are going to go up. And regardless of whether they need to pull back or not, the biggest statistical edge is on the upside with investing and dollar cost averaging in the markets and indices long-term. I think that's the biggest edge. But it doesn't mean we're not going to pull back, and I think the market could certainly use it. And I think a pullback to a certain extent is healthy, but We'll see. SoftBank could invest $1 trillion in U.S. AI industrial parks, according to Japan. I'm looking up some other news. Honestly, the news is pretty light ahead of PCE today. All right, so we did just get a report that dropped recently. An expert is warning that the Federal Reserve could be quote-unquote gaslighting the public. They say inflation expectations have loosened, not de-anchored. This is Craig Shapiro. He said that the Fed Reserve has been, quote, gaslighting the public after the president of the Fed, Bank of Richmond, Tom Barkin, said Thursday that inflation is not, quote, de-anchored. Barkin, speaking with reporters after his speech yesterday, acknowledged that the economy in the United States has seen significant inflationary periods. He said, quote, that means the expectations have loosened, not de-anchored, loosened for both price setters and price receivers, end quote. Shapiro, which is a strategist at Bear Traps, report said, quote, Federal Reserve is trying a new word to continue gaslighting the public into the idea that inflation expectations are still well anchored, end quote. Do y'all agree with this? Do y'all think we still have inflation problems? And inflation should be a big fear moving forward. Let me know if you guys agree with this or not. Obviously one of the biggest inflation hedges, which is gold, has been pumping up today. Pumping up for the last few days, really. In the last 20 days, this is gold from 2800s all the way to 3120s or so at the high. So pumping up big. We'll see if it continues, guys. We'll see if it continues. 40% money supply printed in 2020, high inflation for decades. Yeah. I mean, I think inflation is still a concern. I'm worried more about inflation than anything else, to be completely honest, right? Like, I'm genuinely worried about inflation over everything else. The reason I am is because inflation has seen such crazy gains in prices over the last 5 years. Since 2020, they did too much economic stimulus. And again, to a certain point, it was justified because we needed to save ourselves from the big economic recessions and depressions. And so, to a certain extent, the movement there is justified in terms of the economic stimulus. We sent out stimulus checks. We lowered interest rates to almost zero. The Fed did quantitative easing. A lot of economic stimulus happening there. The consequence of all this economic stimulus, as well as the unique situation of 2020 that had most to do with supply chain restraints, all of that stuff combined made inflation much, much worse in the coming years, right? In 2021, 2022, inflation spiked. And we can honestly see a graph of this here. If I pull up a inflation graph, you kind of see this. Here is core PCE inflation right here. And again, in the following years of 2020, here's July of 2020, 2021, and 2022. You can see core inflation got up to almost 6% following that. Obviously, that's not good. Today, it's expected at 2.7%. So, this big increase in inflation here is what made the Fed go hawkish, right? The Fed had to be restrictive. And after all that economic stimulus, it only made sense to be restrictive. And so here, the Fed did a bunch of rate hikes. They raised the federal funds rate, restricted the economy a little bit. You got to think of it like the reason the Fed goes hawkish or restrictive, and that means they want higher interest rates. They want to push down the economy to combat inflation. The reason they do it is because inflation's spiking up too quickly. And so a hawkish Fed is one that wants to restrict the economy to push down inflation. And so that's what they did. They raised the interest rates, and it's one of the reasons we still have high interest rates modern day or today is because of these rate hikes that the Federal Reserve has done over the past 3 years. They did do, their job in combating inflation. We did see inflation decrease to a pretty significant level. Again, today it's expected at 2.7%. 2.7% is what's expected at year over year. But we'll see if we, get anything over or under that number. We're also looking at the month over month level, which is 0.3%. I think for both core and regular PCE, it's expected at 0.3. And so we'll see what that looks like. Again, we got about 50 minutes, a little bit under an hour before this report drops. And it's a big report. You want to pay attention to this report for sure. You want to be very, very careful and understand that inflation could get sticky. And it's one of the things that the whole public in finance is watching, is this inflation aspect of it. One stimulus is all that was needed. Is lower inflation better for rate cuts? Yes. So in order to justify rate cuts, like you got to think about it in the Fed's job is to keep things balanced. And so if they want to keep things balanced, if bringing interest rates down can contribute to higher inflation, right? If lowering rates can contribute to higher inflation, and the logic of it is that with lower rates, people spend more because they can take out more loans. That in turn, increases spending. Businesses take out more loans and expand. All of this stuff contributes to more money floating around and more inflation problems. And they don't want that. They don't want inflation to spike. And so if inflation's already a problem, they understand that lowering interest rates in that same way can make inflation worse, not better. And so if they're going to cut rates, they want inflation to be under control. They don't want like crazy economic stimulus. They want inflation to be under control to justify it, which is a hard thing to do. All right, so we got Palantir, guys, at $89 a share. I might lose customers over high alcohol and wine prices. Yeah. They don't want that. The market does, though. Maybe. All right, we got almost 600 people here. We still got almost an hour until PCE drops. So, again, higher or lower PCE inflation data. I did a poll today. We got almost 400 votes on it already. 54% think higher inflation. Again, I don't know if I agree with that necessarily or not, but 54% think higher. 46% think lower. I think the market wants rate cuts, and I think everybody wants rate cuts for the most part right now. I'm worried about rate cuts, but I also understand, like, I don't want QE. I think the Fed's way of being balanced, like we heard in the last Fed meeting, is to slow QT down, which is a more dovish action. Slowing QT down is a more dovish action, a less restrictive action. QT is the reduction of the Fed's balance sheet by letting their current holdings mature and run off, right? Now, they reduced their QT in the last Fed meeting by 80% in the cap for treasuries, but they did not reduce them for MBSs at all, right? So they reduced their treasury holdings by 80% in cap, but they did not reduce their MBS holdings, which means that it's going to help. Like, it means that mortgages might get pushed to be a little bit higher still in interest rates. So mortgage rates might stay a little bit higher if they continue to be stubborn with their MBSs as well. So that's kind of the nuance of it. But it is a more dovish thing for treasuries. So as everyone bears or bulls in here, what's the other option? If there's no bear or bull, so a bear means you think the market's going down. A bull means you think the market's going up. If you're not one of those two, what are you? You know? All right, so the consensus is at 2.7% today. One of the consensus is at 2.6%. Previous was 2.6% as well. January's PCE was 2.6. December's PCE was 2.8%. So, yeah. And that's for core. Sideways crew? Hey, maybe. I'm a sideliner. I'm feeling froggy today. Inflation prices with tariffs could slow spending. Yeah. Bull but hesitant? Yeah, maybe. Good morning, everyone from Pennsylvania. Let's make some money. Hey, thank you, sir. I'm a shark. Correct. Treasuries are usually what drives liquidity, but it's very nuanced there. Probably tank for a little bit. Yeah, honestly, we're kind of chopping sideways right now. You could argue we're in a trend here. So like, look, you could argue we're in this trend. But honestly, I think we might chop leading into PCE data. So I genuinely think we could chop leading into PCE. I think we got inflation data coming out. Nobody knows what the data is going to show up as. And so it really is a situation where the market might move sideways in nature leading into it. Just because it's inflation data, you know. It's a big day for markets. It's a big day for economists to watch. And so we could just chop sideways for the next few minutes. We got 40 minutes, 50 minutes until inflation data comes out. So we'll give it time, but yeah. All right, so Alaska's governor said he'll brief the president. All right, so we are in a trade right now. Like, look, I'm gonna go ahead and cut most of this off. We are riding the short. Nice. We're gonna go ahead and cut this a little bit more down there. Nice. All right, so we just made about $60 from this trade. Nicely green on this account. We'll take it. But yeah, so Governor Mike Dunleavy, along with the head of state and Alaska Gasline Development Corp. And development partner Glen Fair Group visited Taiwan, Thailand, South Korea, and Japan, seeking investors and long-term buyers for a project that the president wants in Japan and South Korea and Taiwan as well to join. He said, quote, buying gas and then investing in America helps with the discussions that are happening at a federal level and the national level, end quote. Oh, I gotta put my wedding ring on, man. Honestly, I took it off. I have this, I was hitting the heavy bag and like, I didn't want to like get an infection. It kind of hurt when I bit my finger. And so I took it off. I got to put it back on. Carol will get mad. You know, she won't get mad, but she'll, you know. Even if PCE comes in at 2.7%, the market will still tank because it's higher than last month's. Yeah, that might be true. We got 40 minutes, chat. 40 minutes. Lulu shares fell 13% in pre-market after the sports maker provided a downbeat annual forecast of the broader apparel space battles and uneven consumer demand environment. Yeah, that might be true. I'm not gonna say I told you so with Lulu, bro. I'm really not. I used to like we had this this really weird guy that was so emotionally tied to Lululemon that he essentially like turned into some weird guy on the channel because I didn't like Lululemon. And this was when Lululemon was at like $400 or $500 a share, right? Like way up here. Like look, if I put a long-term chart up, this is when Lululemon was like $500 a share. Lululemon was right here. Essentially when him and I had this kind of like disagreement about Lululemon, and my logic of it was always the same, which is that Lululemon is a fashion company that got big during 2020 when leisure wear was like big, right? Leisure wear was big. Everybody was wearing sweatpants. They were stuck at home. They couldn't go anywhere. So sweatpants became the new big style trend. But that trend was going to change eventually. Like that trend was going to change. It was not going to stay that way. Like new generations sprout up, and what happens? They want to wear different styles, clothing brands, so forth than their parents do. And so while one generation might like Lululemon, the next generation that comes after them might not. And that's a risk, right? I'm not even saying Lululemon doesn't go up long term. And this is almost verbatim what I told him. But that it's a risky investment. Like I'm not going to invest in like fashion retailers because I grew up and American Eagle was big. Nobody shops there anymore. Abercrombie and Fitch was big. Nobody shops there anymore. Hollister was big. Nobody shops there anymore, right? And so unless it's a legacy brand that's been around for freaking decades, I'm not going to invest in that in my long-term portfolio. It just doesn't make sense to me. It just doesn't make logical sense. And again, let me know if you agree with that or not. But in hindsight, it's down 30-something% relative to where it was. And that's in a period of time in which the market has made crazy gains on the upside, like the S&P, the Dow. They're up like 100% right now from where we were. Maybe not 100%, but they're up like 50. And so again, thesis was correct. Thesis was correct. We'll see what happens though. Could still go up, but I just think you're gonna get better gains elsewhere. No, let me see what the chat has to say about this one. Dude, I wore it too, bro. Listen, I wore all that stuff. Like everybody that grew up in the 2000s wore a variation of Abercrombie, Hollister. What else was it? It was like Abercrombie, Hollister. I wore Old Navy too. Some people were snooty about it, but you know. But everybody wore that stuff, man. You know. So much what? What does that mean? Oh, you're talking about Lululemon. Yeah. A&F and Hollister have a new CEO and the brands are growing. Check their next earnings call. I mean, I've seen Abercrombie and Fitch. Abercrombie and Fitch is down. Again, honestly, man, this is one of the shorts that keeps me up at night. It really is. Abercrombie and Fitch. About a year ago, I talked about Abercrombie and Fitch being wildly overextended. If you ever go to the mall and look at Abercrombie stores, nobody's ever in those freaking stores, bro. It could be Sunday morning at 11 a.m. Nobody's in Abercrombie, right? And so what the heck is the reason for Abercrombie making this crazy, obscene move to the upside over the last 4 or 5 years? It makes no freaking sense. Nobody buys this stuff anymore. And so I talked about this when Abercrombie was way up here at almost $200 a share. And I should have shorted it because it is now down over 100% or over 50% versus where it was. I really truly wish I shorted this because it had no business being where it was, no business being up this much. And yeah, I know some people probably lost on this big turn, like this big pullback. You know, but again, understand, like Abercrombie's not making a comeback. It's just not. Nobody shops there. And I honestly, this is probably just kind of some big momentum move of hype where it's kind of like everybody's jumping in, trying not to be the last one holding it. But maybe I'm wrong. I don't freaking know. For the last 30 years, my economic GPS was looking at malls and shopping centers. Never imagined that. Yeah. Nike, the only company. Yeah, Nike. I like Nike. Just because their shoe market. Their clothes market's cool, but their shoe market is really what. "90-day delinquency just hit the highest level since 2008. Did it really?" Chuck Taylor's, American Eagle, and Aeropostale. Those were the preppy kids and jocks in my school. You know, like listen, this is a conversation I have with my wife, right? Because my wife was kind of like, I'm not going to say she was like emo or like gothic or whatever. I don't think she was gothic. I think she was more like emo kid. Like, you know. But this is the conversation I have with her. Is that, because she'll be like, oh, you were a preppy kid. It was like, I wore whatever the girls liked, okay? If the girls like pink bunny suits, that's what I'm showing up as, you know? Like, that's what I'm doing, okay? And that's what most of the other guys were in that stuff. It's not like guys liked the preppy clothes. They just wore what the girls liked. Like, that's pretty standard in fashion over the last couple hundred years, you know? Like, back in the 1700s, if people liked frolicky, you know, puffy-shouldered, weird dresses, like whatever they wore back in the 1700s, that's what men showed up as, you know? And the girls were like, dang, bro, they're looking good. So that's what people wore those clothes for. Like, at a certain point, you got to grow past the preppy kids. I just realized, like, dude, guys and girls are all wearing what attracts their preferred, you know, spouse interest. And so that's all it was. That's all you do, you know? In 5th grade, I had a pocket chain and baggy Jinkos and spiky hair and a freaking, you know, bearing necklace. You know, why? Because that's what the girls at the time were into then too. They, you know, and so styles change, trends change. It's all just about what the other people are interested in. I was a skateboarder, and so really if I had a style, it was a mix between like preppy and skateboarder. I might wear a collared shirt, but I'm wearing like baggy camo pants and Airwalks or Vans or Etnies or something like that. You know, so like styles change, trends change. That's my point. That's why I'm not investing into any of these fashion companies, because there's too big of a likelihood that styles and trends and fashion is going to change. And whatever's cool now ain't going to be cool in 5 years. I'm not putting money into it. It just doesn't make sense. All right, guys. Hey, we got 30 minutes. 30 minutes before PCE inflation. In the 1930s, Abercrombie used to sell access, hunting supply, and rugged outdoor gears. Completely different. Perhaps they should go back to the roots. Yeah, for sure. 100%. John, you're hilarious. I know, man. Listen, you don't have to tell me. I know. NASDAQ up to 1995s here. Again, part of me wants to short this. The point I'm trying to make is don't, like, people see Abercrombie or people see Lululemon have a couple, like, really killer years where they're making boatloads of money. Sure, that's when the trend's at the highest, right? That's when the interest in that trend is at the highest, right? But it's not a justifiable long-term investment. Maybe, look, maybe there's a chance Lululemon succeeds. Very true. Possible. Definitely possible. I'm not saying it's not going to happen. What I'm saying is that the likelihood that it doesn't happen is too high. The variance is too high, you know. They got to do a lot of things right, and companies are known to not do that many things right. You can ask Blockbuster. But thank you for the donation, Jeffrey. I appreciate it, bro. Thank you, sir. All right, guys. You guys red or green so far today, man? Again, let's put gold up. Gold up to 31.11s here. 31.11s for gold. So gold breaking all-time highs again pretty regularly. Hit 31.2440s today in pre-market. 31.2440. So that's the new all-time highs. We'll see if that continues. Down 1,000? Trade safe, man. Don't lose that much. Trade smaller than that. It's too early for that, man. Especially ahead of economic reports. We got too much stuff happening right now to risk that much money, bro. Gold's already been 100 over 3K. Yeah, honestly, and I'm kind of regretting not buying. Maybe I should have bought. But I also think there's a chance gold turns too, and so you got to be okay with missing out on certain moves to preserve your accounts, and I think that's the way you have to be. And sometimes it hurts to watch, but I think you also just got to be okay with missing out on moves, being wrong sometimes. Not letting it spark like emotion to where you're taking crazy risks to try to make it back or whatever. I mean, Apple's definitely innovative. They always have been, right? It's always been a rumor that Apple's gonna stop innovating and stuff like that. Like, that's been a rumor now for a long time. You know, they made their computers back in the 70s and 80s, and for a period of time they did stop innovating, like the early 90s. You know, they fired Steve Jobs. They weren't really doing much. Steve Jobs came back late 90s, came out with those clear see-through PCs that kind of reignited Apple as a big powerhouse in tech. And then they kind of slowed down for a little while as they built the iPhone on the back end without telling much. And then the iPhone came out in 07 or 06 or 07, and then that sparked Apple to be the worldwide powerhouse in technology that it is today. And then they kind of slowed down a little bit. They started coming out with like iPads and stuff like that. But then they slowed down afterwards, and then they came out with the AirPods, and then that reignited them again. And so, you know, every 8 to 10 years, they come out with some like new world-changing product. Last one was, I would say, the AirPods. The AirPods came out, and now they're building other businesses, or they're building other products like the iMac and stuff like that on the back end too. But Apple, you know, they don't innovate every year. It's not something you should expect from them. They haven't ever been like that. Usually it's every 5-10 years they come out with some big product that does really, really well. So where is Tesla today? Tesla at 275s. It's down a lot. It's down a lot. Hit fives, almost fives back in December. Down to almost twos now, but it bounced right back at 273s, 275. So still some extension on the downside, I think, but yeah, we'll see what happens. Oh, Apple Vision is definitely one of the things that is going big, but a lot of people are, whether people consider that a success right now, depends on your definition of it. I like Apple as a company, though. I really do. I think Apple's one of the good long-term investments to make. But again, I'm not an investment professional. Don't copy me. I have no freaking idea what I'm talking about. Might be wildly wrong about anything I say here. Do not copy me. Not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Do not copy me. PCE data, big yellow letters right here if you want to know what they're going to come in at. Big yellow letters. Core PCE expected at 2.7% year over year, 0.3% month over month today. Yeah. Looking at our poll, we got 54% think we're going to get higher than expected inflation data today. 54%. 46% think lower. Yeah, we still got over 20-something minutes left until PCE data drops. We got about 1,000 here. Appreciate the love, guys. I have never understood why Apple is working. Some people working there quite smart. What? I don't understand what you're saying there, V. Augmented reality could be great if you didn't have to wear some big bulky contraption. It'll get smaller as time goes on, though. Like, VR is going to get better and better and better. You currently see it now. Like you don't have to wear big bulky things. Like, if you've seen Ray-Ban's new AR glasses, there's augmented reality glasses that are literally like prescription glasses that you can throw on now. I think they're Meta glasses right now. Ray-Ban and Meta did a deal, and I've heard they're honestly very good. I've thought about buying them. I really have thought about buying the glasses because they look cool, man. They look cool. Release at 8:30 is the PCE inflation data release. Yeah, so again, the NASDAQ is kind of flat right now, man. I'm really tempted to kind of attack some of this choppiness. I'm green on one of my main accounts on the day, but I got to just chill and wait. Again, we got PCE inflation data going live in about 20 minutes or so. About 20 minutes or so. You can see the timer on the left side. It's a little bit early. We got a little bit over 20 minutes right now. About exactly 20 minutes right now. So X-ray classes. Not yet. Not yet. So how do you think the market reacted if the data is higher than expected? I tend to think the market's going to go down if we get higher inflation data. It doesn't mean we're going to go down. One of the things you realize, because I cover every one of these meetings, one of the things you realize is that the market is not a predictable thing in terms of their reactions to economic reports. You know, we can have high inflation data come in. We can have PCE inflation come in noticeably higher than expected, and the market might go up originally from it, or go down originally and then rebound back up. You just don't know how the market's going to respond to it. And right now, we're honestly getting pretty choppy, flat action leading into it. Like, look, pulling up the NASDAQ on the pulling up the NASDAQ here. Here's the NQ. And it's pretty flat. Like, we got our levels here, but it's pretty flat. Not really doing too much. We'll put Nvidia, we'll put gold up. Here's gold. Gold's been breaking all-time highs. Hey, do you have any projections in the event companies can't pass off increased prices from tariffs to consumers because they can't afford it? I mean, I don't know if I necessarily have projections, but I think that companies are going to raise prices regardless. You know, I think affordability plays a factor here, but that the standard of things is going to change more so than the companies are not going to raise prices. I think they're going to raise prices regardless. They're going to pass prices on to the consumer almost always. And so I don't, it's possible that they don't, but it's just rare. I appreciate the donation then. Thanks so much. If you heard just a few days ago, Europe started banning mobile game manipulation techniques. You mean pay to win? Honestly, my son gets so wrapped up in that stuff too, dude. He gets like he'll play a game, he'll beat a certain amount of it, and then they'll make it so incredibly difficult to win. They want you to pay for it. It's becoming really bad, really, really bad in video games. Yeah, companies will jump on it. They'll raise prices almost certainly. You know, that's the problem, is that they're gonna jump on it no matter what, dude. All right, so we're pushing down a little bit here. So we're bouncing off of 930s right now, 930s. I wanted to attack this range, and what I meant by that is, like, ahead of economic reports, this type of action is very common. Very common. And so what I wanted is to short the top of this little range here and attack this downward pressure. I made a little, and that's kind of what I did. You can kind of see I'm green on the day, but I could have done this a little bit heavier, I think, and really jumped in on this edge because I was confident in that type of thing. But hey, it's all good. And remember, next week we got Tesla delivery numbers. Speaking of Tesla, we do have Tesla delivery numbers next week. So it's a very busy week next week. I didn't even know we had Jerome Powell. Now I realize we have Jerome Powell at the end of the week. So next week, we've got Chicago PMI Monday. We've got S&P manufacturing PMI services. Or no, we got the JOLTS report, ISM manufacturing, construction spending, and more on April 1st, April Fool's Day. And then on Wednesday, we got Tariff Day, April 2nd, Liberation Day, whatever you want to call it. ADP Non-Farm Employment Day, factory orders, Kugler speaking, and then we got Tesla delivery numbers as well, probably happening April 2nd, right? The same tariff day. April 2nd, we got Tesla deliveries, tariffs, ADP non-farm employment data, and more. Thursday, we got jobless claims, trade deficit data, ISM services, 2 different Fed speakers, as well as jobless claims unemployment filings. And then Friday, we've got non-farm payrolls, unemployment, and Jerome Powell, as well as 2 other Fed speakers speaking in the late morning. So it's going to be a fun week. That's a crazy week next week. We're going to stream it all live here like we always do, so don't forget to subscribe, hit the notification bell. We appreciate it. NVIDIA pushing up a little bit, though. It's at 112s right now, leading into this economic report, chat. Yeah, it's a big week. It's an interesting week for sure. Yeah, that's a busy week right now, man. We got all this stuff coming out, so y'all be ready. Whew. Yeah, we got PCE inflation data going live. Look at this market bounce back up. So it is kind of choppy right now. We're looking at gold. Any other symbols? I'm looking at, I want to see what bond yields are doing. Let me see. I feel like they're probably flat. It's actually up a little bit over the last 3 days. But still down big with the whole market correction thing going on. Most people are correlating like a market correction with an economic weakness, which in turn brings interest rate sentiment down. Still looking like at least June until we get a rate cut, though. Most people think we'll get a 25 basis point cut in June as of now, but it also depends on what the what Powell says. Robinhood getting low? Is it really? Yeah, I mean, Hood hit almost 70s. It's now down to 43. Palantir pushing flat here. Yeah, look at the range here, man. I should have attacked it heavier. I should have attacked it heavier. Look at that range. Gets to the top, pulls back down some. The 200 exponentials right there, giving it a little added support. Palantir's down on the day, but it's not much. It's mostly flat. Look at the previous closing price here on Palantir. It's right around $90 a share for Palantir's previous close. So we still got a little space there, to be honest. Yeah, y'all be careful. We got economic reports today. Not only do we have PCE today, but we have the University of Michigan consumer sentiment and inflation expectations. That's honestly been a more important report than it has been recently. So like the last month or two, the University of Michigan report has been much more influential than it normally is, to be completely honest. And so we do have that report at 10 o'clock today. We'll see if that influences markets as well as PCE. And this is all leading, of course, into next week, man. Next week is very busy. And so just be ready. Be ready. What's up, Dean? Be careful today. Who knows what the heck will happen? Yeah, for sure. Buy the dip on gold, you're saying? Maybe. Remember, guys, not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Understand CFTC 4.41 hypothetical or simulated performance have limitations. I'm not an investment professional. Do not copy me. With that said, we'll see if we can make money today. All right, guys, we got 10 minutes left. Over 10 minutes still. And again, the reason we get thousands of people here is because we cover it as soon as it drops, as soon as it releases. We'll be here ready. Again, expectations for this are 0.3% month to month for core, 2.7% year over year for core. Regular PCE expected at 2.5% and 0.3% month to month. We also have personal income and personal spending data. Canadian GDP data drops at the same time as this as well. We got Dallas Fed PCE for February expected at 2.5%. We got Michigan 1-year, 5-year inflation expectations, as well as consumer sentiment and expectation data at 10 a.m. And inflation expectations have been rising here too, right? So inflation expectations have been bumping up some as well. So just be ready, guys. This is an interesting report. We got the Atlanta Fed GDP now. Last time it showed up at minus 1.8% for the current quarter. Minus 1.8%. So a lot of people, including Atlanta Fed GDP now, think that we're having a negative quarter right now in quarter one of 2025. Remember, yesterday's GDP was up a little bit, but that is a lagging GDP report, right? Meaning yesterday's GDP showed the finalized GDP for quarter four of 2024. Right now we're in quarter one of 2025. We're in March. And so, yeah, they're basically expecting the quarter that we're currently in to be a negative quarter. So, again, we got about 9 minutes left, chat. 9 minutes. Yeah, y'all hit that like button if you haven't already. Yeah, but I don't want you to copy me, you know. I'm not convinced it's all baked in yet. Worried they stopped halfway down. Maybe. All right, guys. Yeah, we got 8 minutes. A little bit over 8 minutes, but still. Palantir pushing. Yeah, Palantir's trying to go flat on the day. Gold dipping down some. NASDAQ pushing up some. The levels I'm looking at, honestly, right now, 19,975, 19,950, 19,930. I'm also looking at 19,900 as well. So what's up, Vlad? What would a low core PCE inflation mean for markets? It means low inflation data. It's probably a more optimistic look. This is one of the overarching things to understand about everything today. The market wants rate cuts. Okay, the market wants rate cuts. Rate cuts will save super high rent in some ways, save mortgages in some ways, if it can trickle into mortgages. We're still doing QT on MBSs, so that's, mortgage rates have basically been flat. But lower interest rates generally stimulate a stronger economy. And if people are worried about a current negative quarter, they want rate cuts, right? And so one thing that low inflation means is more of a green light to cut rates for the Federal Reserve, right? The Federal Reserve might have more of a green light to cut rates if we get lower than expected PCE inflation data, which is what the Fed looks at to gauge inflation. It's what the Fed looks at to gauge inflation. So this is a very important metric that the Federal Reserve and Jerome Powell are going to look at, and it's just something you want to watch. Again, Barkin countered Jerome Powell's tariff-induced transitory inflation remark and told reporters that he wouldn't assume that there would be just a one-time increase in price. Michigan consumer sentiment is at 10. So Michigan consumer sentiment is at 10. All right, we got 1,500 people here. We still got almost 7 minutes left. We got about 6 minutes, really. But, today will prove Jerome Powell made a mistake when he unnecessarily cut rates by 75 points last year. Didn't he cut rates by a full percentage point? He cut rates a full 1 percentage point, a full 100 basis points. He did 50, and then he did 25 and 25 in December. So that's 1 full percentage point. 100 basis points is what that is. I'm so over the rate cut BS. Thought mortgage rates would have come down. Now I'm hearing it's tied to the 10-year. It is. Well, MBSs are influencing it as well, but that all has to do with bonds and like anyways. So yeah, that's why I watch. If you look at me when I watch TNX, thoughtful, that's what's gauging mortgage rates, right? So mortgage rates, like, look, here's TNX. And really, interest rate sentiment for that is actually up since October. So is higher or lower PCE good? I would say lower PCE means lower inflation. That's better, right? Higher means worse. Lower means better in general, but it varies, right? It varies. Generally, low inflation is good regardless of what's going on. We got weak economy, low inflation's good. We got a strong economy, low inflation's good, right? Now, sometimes it's hard to see low inflation with a strong economy because the stronger the economy, the economic machine is, the more people spend, the more prices rise, right? But in general, I would say low inflation is better regardless. It doesn't necessarily mean if we get low inflation, we're going to get a positive reaction, or if we get high inflation, we're going to see a negative reaction. But I think it's a little bit more likely today just because the market wants rate cuts. I wish it was that easy to predict, Paul. Paul said GDP came in stronger. People were buying more, so technically month over month should come in at 0.4%. Maybe. I mean, it's not a bad correlation to have. I don't know if it's that easy, but I understand the prediction, to be honest. Also, when there's massive inflation, we need deflation. Yeah, we got 4 minutes left, chat. 4 minutes. Yeah, what's up, Psy? What's up, Wild West? What's up, guys? Yeah, 8:30 PCE inflation data coming out. We also have, again, the University of Michigan Consumer Sentiment Index drops at 10 o'clock. We're going to cover that as well here. Yeah, today and next Wednesday is going to be important. Honestly, the JOLTS report on Tuesday next week is going to be important as well. Friday, non-farm payrolls and unemployment next week on Friday are going to be important. And then we also have Jerome Powell speaking again on Friday. So next week is just every day is something going on. So yeah. 2.2%. Yeah, I mean, I don't think we're going to come in anywhere close to that low. It's expected at 2.7% today, chat. 2.7% expected. So I don't think we're going to come in anywhere close to 2.2%. That's way too low. I just don't think that's going to happen. It's possible. It's just unlikely. It's improbable. All right, guys, we got 3 minutes left. 3 minutes. Two and a half minutes left. Hit the live button next to the play button, guys. Make sure you hit the subscribe button. Hit the notification bell. We appreciate it. We got a little bit over 2 minutes left. We're going to do a countdown as we get closer here. Bond yields, honestly, showed up noticeably lower at 4.33% today. 4.33%. 2 minutes left, chat. We got about 2,000 viewers right now. Y'all be ready, man. PCE is an incredibly important metric. So 2 minutes. 2 minutes. And we're going to trade live at the opening bell today immediately afterwards, too. So stick around. Love the channel. Glad to see you're steadily climbing. Hey, thank you, bro. Appreciate it. Yeah, the channel's doing good, man. Channel's doing good. I mean, like, we're in a specific niche of economic reports. If I acted like I was just the greatest guru of all time, then maybe we'd get more viewers. But honestly, we're doing pretty good. We got about 2,000 here, so that's pretty solid. We got a minute and a half left, chat. A minute and a half left. Is that red wine? No, this is coffee, bro. Bro, it's 6 a.m., 7:30 in the morning in Texas right now. I'm not a drinker anyway, really, but definitely not wine this early, bro. We got a minute left, chat. A minute left. You're realistic and honest. Hey, thank you so much. You love this, John? Honestly, I really do. I love economics. I think people can understand that when they watch my stream. I like trading, too, but, like, if you can predict economics, you can make money. Like, that's the thing to understand. Trading's great. Day trading's good. I do all of that stuff, too. But if you can predict economics, that's where the big money is. All right, guys. Hey, we got 30 seconds left. 30 seconds left. Let's see what we get today. 30 seconds. Honestly, I'm kind of excited for the University of Michigan consumer sentiment data, too. All right, here we go. 15 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. 15 seconds. This timer's a little bit early. We got 5 seconds left. 5, 4, 3, 2, 1. And here's the report right here. All right, market flashed down quickly from this report, guys. Very quickly decrease. PCE came in at 2.8%, higher than expected, 0.4% month to month, higher than expected on both big metrics. Regular PCE came in as expected at 2.5 versus 0.3, but regular PCE came in at, or core PCE came in at 0.4%, weaker than expected. And look at the downturn in markets, 0.4% higher than expected inflation data, 2.8% year over year, higher than expected year over year. The NASDAQ has turned down on this report. The NASDAQ has turned down. Regular PCE came in flat. Core is the most important metric in the Federal Reserve's mind, and it showed up worse than expected today, guys. Worse than expected by 0.1% uptick. This is 0.2% higher than it was last time, though. So this is 0.2% higher, which means inflation is consecutive climbing month to month. But it is worse than expected here. Now, this is a small drop. It's not a huge drop yet. And sometimes the first move is the wrong move. Shout out to whoever said 0.4%. And I kind of agreed with you. Good job, though. You got it right. Nice job. 0.4% was right. But again, sometimes the first move is the wrong move. And just because we had high inflation doesn't necessarily mean we're coming down. There's definitely a greater possibility of a downturn now. But this is a pretty small move overall. Where'd Bitcoin do? Again, higher than expected inflation data, chat. Higher than expected. And so look at us. We're coming down here, guys. We're coming down. We're at 18.9 or 19.9s. Just broke 19.9s. Let's see if we keep going or if we find support. All right, guys. I'm going to end this poll. Vote on the new poll right now. Does the market close red today with the recent higher inflation data? Yes or no? Vote on the poll. Let me know how you feel. Also, guys, if you want to check out my sponsor, this is my first plug all day, and we are going to trade live. Check out TopStep. TopStep gives you a demo. They test your skill with a demo. It's only $50 a month for this subscription. It's very cheap. With that, they give you a 50K demo in futures. If you can make 3K in profit without losing 2K first, following their rules, they fund you $50,000 with a 90% split. Very similar to funding your own account, but if you lose, you're out $50. It's a great way to learn how to day trade. Most day traders lose, and this is a lot cheaper way to learn. And if you fail, you get a real-time practice account to learn on for the rest of the month anyway. So the value is there, and they paid out almost $200 million, fund thousands of traders. A great way to help support the channel. In the futures market, you day trade the S&P, the NASDAQ, the Dow, the Russell, gold. Some currencies patterns are very similar to blue chip stocks, but they're an affiliate of mine. I am biased. I get paid by them. Top 3 most biased trader of all time ever in the world right now. Understand these rules, but I'm putting the link up in chat right now. Great way to help support the channel. That was my fastest plug of all time. I tried to get it out the way. Market's rebounding back up. It's at 19.92 right now. 19.92. The market's coming back, and sometimes the first move is the wrong move. We're about 60% back from this drop that we took from PCE. And remember, we are going to stream the University of Michigan inflation expectations at 10, University of Michigan consumer sentiment and expectations at 10 a.m. today. In a couple hours, we are going to stream that in an hour and a half exactly. And so stick around. We are going to stream all of this live as it happens, guys. So stick around. Actually, I'll wait for the first 20 minutes of market bell. Looking at our poll, 71% think the market closes red today with the recent high inflation data. 71% think the market closes red. Bond yields are decreasing on economic weakness and lower interest rate sentiment on that economic weakness. So higher inflation data is not good, guys. It's not good. But honestly, higher inflation should mean higher interest rate sentiment, especially in terms of this. So sometimes it's nonsensical. Take a look at Apple. Apple's down. Tesla's actually still green on the day. Nvidia decreased a little bit from this report, but not much. But the market has downturned. It's testing 19.9s again. Look at this drop. Higher inflation data coming in, bumping the market down. And again, we do have the University of Michigan consumer sentiment and inflation expectations today, so stick around. Somebody else is the top G. John is the top 3. I love it. I love it. I'm the top 3 most biased trader of all time ever in the world. But if I'm the top 3, who's top 2 most biased ever? Let me know. Is it true what somebody said? Learn economics so you don't get fooled by economists or economists? Yeah, that's true. Absolutely, it's true. And I'll show you why. I'll give you an example of this, okay? Let me show you an example of this. All right. I'm going to put a long-term chart of the S&P or the SPY up. Market's testing the lows that it made from PCE inflation. But let's talk about this. Learn economics so you don't get fooled by economists. All right. So here's an example. This is a period where we had a restrictive Fed in 2022. So many big banks said the market was scary right here. They said the market would go red. They said it was doom and gloom. They put out a lot of bear theses, a lot of red thoughts on the market, a lot of pessimistic thoughts on the market right here, right? And this was a period of time when I told everybody I thought the market might go up. I thought it was bullish. I thought it was down a lot. It had been downtrending for almost a year straight. And I was trying to buy stuff up, and I did buy stuff up. But all the big banks, red, all in this area right here, okay? But inflation was decreasing. And so there was optimism, I think. And what ended up happening is we had one of the longest bull runs in history following this. And a lot of retail traders missed out on it. Why'd they miss out on it? Because they're following the big banks. They're following the economists in some ways. And the AI boom obviously took off. But yeah, learn economics so you don't get fooled by all this stuff. Understand the market's going to go up most of the time. It's not going to downtrend for years and years and years. Usually, sometimes it does, but it's not very common. And so betting on that every other year, you're going to get tricked. Now, the market and the economy are two different things, but inflation was decreasing. The Fed was pausing rates versus raising them still. So there were some optimistic ways to look at it. But here, I'm going to put up NVIDIA here. We're retesting these lows, chat. We're retesting these lows. We're at 19.8s now. Retesting these lows. Let's look at 885. See if we bounce at 885. But look at this. Market's turning down. Top 3 contrarian, different contrarian idea haver all time. Definitely top 3-ish. Alright, so look. Alright, guys. Still got 2,000 here. Stick around. We're going to trade the opening bell live. We're green on the day, too. I'll show you guys my trading here. Let's trade a little bit. I'll trade it. We'll try. Wish me luck. Look at this red action showing up, chat. Wow. We're going to look to buy it at 863s or 865s. Look at this. It might bounce before then, though, too. Look at that rebound here. Because the data wasn't that... Okay, look, it wasn't that bad. It was 0.1% higher than expected. The market certainly interpreted it as negative. But it wasn't terrible. It wasn't the end of the world inflation. You know, honestly, anything under 3% is pretty solid. Relative to what it could be, like PCE inflation, core PCE was at 6+% in 2022. And so in the end, it's not like the end of the world report here, but it's certainly causing a negative reaction. Trade at Amazon. We got a cushion on the day on this account too. We made money attacking the chop of PCE. CPI is the first 2 weeks of the 2 weeks. CPI is usually about a week and a half to 2 weeks into the month. So CPI is going to come out anywhere between like the 9th and the 15th of April. Usually, I have to go check the schedule, but that's usually CPI almost always comes out the first 2 weeks, a little bit under 2 weeks into the month. Usually it's like the 10th, 11th, 12th. 13th, 14th. That's usually when CPI comes out. Market is red because PC inflation data showed up higher than expected on both core month to month and core year over year. Flat for regular PCE, but core is the most important one. So there's a decrease here, still downtrending. We're going to start to buy right here. Kind of a risky buy, but hey, we'll try it. Took half off there, locked it in. Took another piece off, locked it in. And we'll get out the rest right there. Okay, not bad. We caught the bounce. Look, where did we bounce? We bounced at freaking 65. Top 3 best level of all time right there. Coming from the top 3 worst trader ever, it's not a bad level, I think. It's April 10th? Yeah. Okay. Yeah, always understand CPI is usually first 2 weeks, a little bit under 2 weeks into the month, right? 10th, 11th, 12th. I don't even have to look at the date. I can basically, you know, if you remember that, it's usually when CPI shows up. It's the first couple weeks into the month. Yeah, I'm not going to fight the trend too much. You see, that's why I cut it quick. Like, we make a little bit and then we get out fast. Because, like, I can predict these levels here, but I can't predict how long it's going to hold. So sometimes we'll move down, we'll test the levels, and then we'll immediately bounce back. And I just don't want to get stuck in the wrong trend. So. This 885 level held too, though. Look at that. Oh, let me put the numbers up on screen. I already talked about the numbers. I just didn't post them here. I'll post them right now. Hold on. All right, I'll put them up on screen. All right, so there's the data on screen right there. All right, so there's the data. We'll see if it holds. All right. What's that? Oh. I love you. Have a good day. All right, guys. So we are holding some support here at these levels. What about Jack? All right. Market wants to close red for the week. Yeah. All right, guys. We're going to trade into the opening bell. We're in this kind of consolidated range here. So, like, look, this level held exactly where we wanted it at 65. We drew this level like a few days ago. Now we broke down, consolidated into it. We'll see if we can make any movement here. Can you chart the S&P? I don't know, man. Again, I'm not an investment professional. I don't know what the S&P is going to do either. I can look at the SPY. I mean, the SPY is right at the lows, right? So this is actually a pretty big spot because the SPY is right at the lows of the day. SPY's at 564.90s. The lows of the day are at 564.40s. So if we zoom out a little bit here, you know, this is very similar to the SPY where look at the lows of the day. I think if we break down under this level, it's going to become highly likely that we're going to crack down under this level too, which is at about 847s, 846. But I think we have to break underneath this support level to kind of get that magnetism towards the lows, if that makes sense. So like if we break down underneath this, and I think it's a very similar thing for the SPY, although the SPY is even closer. I think we're going to get pulled down. Hey, bud. Love you, dude. Have a good day, buddy. Hey. Hey, hold on. All right, guys. All right, so again, we are bouncing a little bit. I'm waiting right now. If we break under this level, I think it's going to become a lot more probable that we're going to start testing this low at 850s. And so that's kind of what I'm looking at now. It just depends on how much we bounce up. If we get some bullish action and start to reverse, I think either one of those things can happen. And so we just got to kind of wait. Yeah. Yeah, so inflation data coming in high. Let's watch nines as well. I'm looking at the level of 9, 19.9 on the NQ. On the SPY, I'm looking at 565.50s. 565.50s. We'll see if we hold. How are you setting your blue lines? Yeah, support and resistance. I'm just documenting them, and then if they're good levels, I'll leave them on my charts. Like that 865 level that I ended up being right about was an old level that I had on my chart yesterday, but I remember the level. Honestly, I remember trading it with Dolby on Top Step TV. That 19865 level is what I talked about, and that level, I remember it holding then, and so that's why I wanted to pay attention to it. Kind of goes to show, like, leave levels on your charts because, you know, they can be valid. Look at this turn. Look at this red candle here, guys. Let's take a look at rate cut sentiment now. Interest rate sentiment and rate cut sentiment. So at this point in time, the sentiment has changed even more. You can kind of see we have a 89% chance. This has actually gone up a little bit from this meeting. An 89% chance of a pause. And that makes sense because inflation data was worse, meaning the Fed is going to be more apprehensive to cut rates with high inflation data. So inflation data worse makes the likelihood of a pause in May greater. All right, so here we're breaking down. Robinhood breaking down a little bit as well. Tesla falling down some also. Palantir still under 90. Meta just testing lows as well. Meta's breaking down, testing lows under 600. Apple's been breaking down all morning. AMD is down. Nvidia is now red on the day technically. So we're getting some red action showing up here, chat. So a May pause is pretty priced in at 90-10 likelihood of a pause in May by the Federal Reserve. All right, so here, look, we're breaking down some more. All right, so now we're rebounding here. We bounced off of this 8-7 level multiple times. We're starting to rebound back up and test some levels here. Let's see what happens. When high inflation make them keep rates steady. High inflation is going to... Okay, so the Federal Reserve, if they cut interest rates, that might make inflation worse. And so in order for the Federal Reserve to have a green light to cut interest rates, they need inflation to be under control. Right now, 2.8% inflation is not the end of the world. It's not the worst it could ever be. But it coming in higher or worse than expected is going to make them question whether they need to cut rates. Because inflation's still a problem. They don't want to cut rates like that. Right? If inflation's still a worry, they don't want to cut rates like that. And so higher inflation means that the Federal Reserve might be more apprehensive in rate cuts because of inflation worries. And they don't want cutting rates to exacerbate the problem there, which is inflation, right? Lowering interest rates might make people spend more, and that might contribute to higher inflation, which they don't want inflation to spike out of control. So I hope that makes sense. Yeah. All right, guys. Yeah, I mean, PCE was slightly higher. It wasn't terrible. It wasn't like the worst it could ever be. And honestly, even this red reaction, it's not the end of the world. If we take a look at the SPY, we still got a ways to go. Like this level down here at 550 on the SPY is the level, right? Like that's the big level. It's the bottom of this correction right around at 550s. If we crack under 550s on the SPY, on the NASDAQ, we crack under, really it's like 19,130, 19,120. That's when we're starting to get into really scary territory, and so, yeah. We're still a ways off from that. But I think with all the volatility that we're going to potentially get next week, it's just something that we have to be weary of. We have to be prepared for because, yeah, inflation is scary and risky, and you just want to be careful. All right, so again, we're bouncing up a little bit. We're kind of chopping sideways on the NASDAQ at this point in time. I think my headphones just died. I guess you guys can still hear it even without these headphones, so that's fine. Yeah, And so again, we're going to do an x.com post. Major indices down. Investor sentiment. Yeah, Lulu is still down pretty big. And if you want like a summary of PCE, we got one here that we just posted here. So again, we've been growing our x.com page. So if you want to help support your boy here in this channel, check out x.com. Here's the link to that. Yeah, as long as y'all can hear the music, cool. Oh no, we got, yeah, the tariff news next week is absolutely huge. So again, now we're breaking down underneath this. If we get a retracement, I might short into it small here. We'll take 2. We'll see if we get a little bit more. But this recent breakdown, we'll take 4 contracts. We've got a cushion on the day, but we're going to limit this pretty quickly if it doesn't go in my favor. All right, so we jumped in shorts. I don't like this. I'm going to cut half of it there. Kind of get ripped up. I thought we would break down some here, but it's okay. I just got ripped up. Still green on the day still, but I like the move. I thought we had a little bit better action there, but we ended up retracing back down. I'm still looking at 18.9s here, 18.9s. And I do have a couple combines I can trade while we wait. We'll try to short this level here. So again, just to put this into perspective, this is now, if I can make 3K in profit on this 50K demo without losing 2K first, following rules and conditions, then they fund me 50K with a 90% split. It's $49 a month, so that's my risk here is what I'm taking. No PDT in future, so I can day trade the S&P, the Dow, the NASDAQ, the Russell Gold. So the point is, if you see me lose a couple thousand taking a risk here on this account, it's not actual money. And I'll switch to my funded account in a second here. But yeah, just, you know. We're actually green on the day in our live funded accounts, but on this one we gotta trade a little bit differently. I have to be a little bit more aggressive here, and so we'll see how that goes. Yeah, so we got PCE at the bottom right here. So if you want to see the PCE results, this is them right here. So we're going to limit some of the size now that we're actually kind of green on this. That way we can maybe add back to 9s, which is what I wanted. I think I got a little overzealous there, so we're basically flat on this. So there's 1. We'll add the 2 right there. So we were tapping 9s. We got close enough. But we'll see if the inflation data can lead us in the right direction. If Nvidia stays green, it'll be so good for markets. Yeah, I mean, Nvidia is what's been dragging the market down, to be honest here. So Nvidia has been what's leading the market down. It's been weak. It dropped from like 120s all the way down to 110s. And so, yeah, we definitely need Nvidia's strength. All right, there we go. There's the breakdowns. Go ahead and take a piece of this off. Just lock some of it in. We got 20 shares left, so we took 3 out of 5 off. There we go. Getting the flush. Take another piece off there. Just lock that in. And maybe gonna add to this too. We got a support level right here. I don't want to see us bounce off of that, but I can't add to it and see if we retest, which is good. So we ride the breakdown. There we go. Nice. All right, so we are now up about 5 on this account, 500. A little bit of ways there. I don't want to see us retrace too much here though. Try to add to a winner and then keep a tight risk. Took another piece off there. There's the breakdown we wanted. We'll hold the rest break even. I think that's probably the smart move. And if we break down enough, we'll add to it. But we're going to hold the rest break even here. Market's still getting stubborn, breaking down a little bit. Again, if we break under 865s, I'm really bearish. But again, if you want to check out Top Step, here's if you want to try this funded account program with me, here's the link in chat right now. Great way to help support the channel. They are an affiliate of mine. I'm biased. There we go. We're going to add to this now too. So 15 shares. Take some off there. Take some off there. And then I'm going to cut the rest and then maybe re-add here. So yeah, we are up about 7 on this account. 7 on the day, that is. So it will trade our actual funded account closer to the opening bell. All right, so here's testing lows. Let's watch that 865 level we talked about. 865. Oh yeah, obviously it's bearish. Especially when we break under this. Like, one of the reasons I use my levels, and if you pay attention to what I'm doing here, like one of the ways I use my levels is I wait for us to break down under like what I consider a milestone level. It's what I did here, and I got kind of faked out and then we popped back up. But when we immediately like moved right back down here and broke underneath it, then I'm like, okay, I'm shorting this or I'll add to it. And that tended to work pretty well. Here's 865. And we just dumped underneath it. So, but now we might liquidity grab over it. So we tapped it and now we're right back up. See if we would get pushed down from all the sellers jumping in at this crack here. I'm gonna wait. Yeah, I'm gonna wait. Definitely looking weak. Let's see if it holds now, though. I'm watching 850s now. Still breaking down. Definitely looking a little sketchy here. Let's see if we get that momentum on the downside now. We got a little cushion in our funded account here at the opening, but I'm looking at 850s though. It's a big candlestick, but let's see if it holds now. Chat. Starting to fight its way back up. Look at that 865 level, hold its resistance now. So I think this is an important spot here. National Treasure John, that's me. That's me, bro, of course. All right, guys, we got the University of Michigan consumer sentiment data and inflation expectations at 10. So just be ready. Here, chat, be ready. Yes, we got the PCE data release here. Yeah, so we're going to be day trading the NASDAQ more. Let's see what we got. So we're trying to rebound back up. All right, guys, so yeah, I was trying to see. We got inflation data out. Look at the breakdown here. So we just cracked down. We held rejection resistance at 865. Let's look at 851. So we rebound back up. We finally did find some support. Going to Houston. Rudy's is good. I like Rudy's barbecue. There's a bunch of good barbecue places, to be honest. El Rey. If you want some good like Mexican Cuban food, go to El Rey on Shepherd. It's kind of like a little hole in the wall place, but it's honestly great. There's a bunch of places, man. Alright, so look, we rejected it at 863s. We're down to 19857s, 19856s. All right, so $120,000 was liquidated from the crypto market in the past overnight, basically, or more. Truth Barbecue, Washington Avenue, yeah. Yeah, again, we're still red right now. I'm just waiting here, to be honest, man. This level right here is a... Like, look, we have this level right here, this isolated low. This is us now. We're right here. Now, I tend to be very bearish because I think if we can break underneath this, it could ensue chaos and doom in markets. SPY just broke lows of the day. And you know, we are close enough to those lows of the last 5 or 6 months to where it could get really red. But who freaking knows, man? Y'all just be careful today. I don't know what's going to happen. We got 20-something minutes until the opening bell. Took your advice on El Rey a year ago. Yeah, it's a good place for sure. Good. Really good food. Get their summer special. It's good. It's got like a mango shrimp taco. It's very good. All right, so look at this rebound here. Part of me wants to short. And since I'm in a combine, I guess I will. We'll play with this. We'll just add to some winners or some losing trades in our combine. We got a big cushion on the day. What is going on right now, though, dude? Some type of red action happened. I gotta bail out of this quick. Some type of news just happened. Let's see if we can figure out what it is. Good thing this was just a demo account, dude. We're probably gonna lose this challenge, but that's all right. But man, dude, what a crazy move. I'm wondering, like, what started this? I want to see a larger retracement. Let's see if Pawn knows. I gotta kind of just double and triple size into this because this is probably already done, to be honest. But we'll try it. Could just be a rebound. That's definitely possible. It's too big of one for me, though. It's a huge rebound, though, dude. Like, I'll keep trying to short it, but, like, I gotta risk the account, I think, trying to. There we go. Alright, we're back to flat on the day. That's good. Just craziness, man. Look at this move. Honestly, somehow we got back to flat on this thing on the day, dude. I don't know how. I don't know how I did this, but hey. Sheesh, bro. We got back to where we're... I got to be ready to cut the... I'm going to hold the rest break even, and we'll try to write it down. But, man, what a crazy candle. I don't know what this was. The EU plans concessions for Trump after reciprocal tariffs hit, according to Bloomberg. This is what it was. Here, this is the news right here. This is the news right here. The EU plans concessions for the president is what the news was. That's almost certainly the news, which is optimistic, of course, right? Like, that's what happened here. Yeah. Again, somehow we got ourselves back to flat. I don't know how, man. We were down like a K today. We're up over 1,000 in this account already. So, like, regardless here, I'm going to cut this and just be happy we're kind of flat. It looks like that was the right move because we just ripped up. Man, what a crazy... This is how you got to be in trading. Day trading, man. You got to be ready to cut quick. Because, man, what a crazy reaction to that. And honestly, it kind of needed this. After the PCE inflation, Like, you can have all your different levels, all your different theses. I've said this once, I'll say it again. Fundamental news can cancel out any type of technical move ever in the market. And this is something that technical traders need to be incredibly aware of, is that you could have the best level, the best crossover, the best support and resistance line, whatever it is. You get some big economic or market fundamental news, it can trump, pun intended, all of it. It can trump all of it. And so just be ready to react to this stuff too, because leading into April 2nd, tariff news is going to be wildly influential. And this news, again, EU plans concessions for the president after reciprocal tariffs hit, according to Bloomberg. That is the news that's making people more optimistic. That's why we have you. So thank you, sir. You're welcome. You know. All right, we'll see what happens now. But we'll see if this is enough to save the market today, because we're honestly almost back up. So here's where PCE came out right here. And then this is where we are now. So we're almost all the way back up from this one tariff concession announcement. We're almost right back up. You are both right or wrong. That's the paradox of beginner trading right here. I'm the top 3 most right and most wrong person in finance right now. Definitely top 3. Are we putting more importance on tariffs or inflation? Well, it's not which one's more important. I'll tell you this. It's not which one's more important. It's which one came out last, right? Inflation data came out almost an hour ago. Tariff news came out 5 minutes ago. And so it's not which one was more important, it's which one came out last. Right now, remember, in 45 minutes, we got the University of Michigan inflation expectations and consumer sentiment report. That's the next one in 45 minutes. So we'll see what that looks like. But yeah, it's not which one came out last. Or it's not which one came out more influential, it's which one came out last. And that's the one that came out last. Yeah, so again, those concessions for EU regarding the U.S. president is a big release right now. It's causing a lot of optimism regarding a lot of different things. Nvidia's bouncing back, Tesla's bouncing back. All the sectors of business in which tariffs are fearful are rebounding on this concession news for Europe. Nvidia's up to 112s. The Nasdaq is back up to almost 19,975. What else? Palantir's almost up to 90. We could go long, but again, for me, I'm probably just going to wait till the opening bell. Like, I could play with this account a little bit. Like, we could probably long a big up wick here. Like, I'll play with it, but like, we're kind of extended on the short-term chart, but I'll play with it. It doesn't matter. I mean, it's a combined account that we're already up thousands on, so. There we go. Nice. We might add to this now if we can get over some of these resistance levels, but we got to be a little strict with it too. Yeah, we got to cut the rest. So we actually made money on this trade, but can actually add to this and try to probably have a pretty good chance of making money. There we go. Yep. All right, so we made money on that one too. Yeah, we're basically completely flat on this. We're up over 1,000. We're up about 1,100 on this account right now. So kind of going back and forth. It's a little bit more volatile of a day, and so for trading in pre-market, I think it's a little bit riskier to trade right now. Do you guys think the market goes up from where we are now? Yes or no? Put yes if you think the market's going to go up in chat. No if you think the market's going to go down leading into the opening bell. Again, we got the University of Michigan consumer sentiment and inflation expectations. 10 a.m. We'll cover that live like we always do. But, man, y'all just be careful. All right, so looking at the chat. Yes, yes, no. Yes, no. Yes, 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 no. Yes. Big green day ahead. Up 2%. Yes, yes. Most people think we're going to go up now. We got some no's in there. We got some hell no's. We got, you're my boy Blue. Shout out to Old School, the movie. Yes. My biggest green day, I don't know, it was a couple thousand. I was shorting Uber one time, and it came out that the state of California was suing Uber, and Uber dropped like 5% instantly, and I made a bunch of money from it. That was probably my best trade, my biggest trade. I made a lot from it. But again, I don't even claim to be like a good trader or investor. Like, people try to like isolate, oh, this guy sucks at trading, But like, I don't even claim to be good. Like, they're just kind of grasping at straws, trying to find something to attack because I'm so handsome, When you look this good, I mean, people hate, You got, when you run the top 3 greatest economic community in the, space of YouTube, people tend to dislike it, I think. But honestly, it's a really good community. I have a friend at jiu-jitsu who says he watches this stream. And I didn't even realize he was watching it, but he said good community. He said you guys were good. And so I appreciate you guys. Shout out to you guys. Maybe. Chat is very bull biased. Yeah, sometimes. I think the biggest statistical edge in markets is on the upside, though. And so we can go against that, and that's fine short term. But if you hold on to that thesis long term, you're usually just losing boatloads of money, man. It's also because you filter the toxic people. Yeah, for sure. I mean, I'm not going to leave them around. It doesn't make any sense to. I just assume most of the toxic people are like people I know in real life that just haven't really done much, and they're like so insecure about it that they try to feel powerful acting that way on social media. That, or what you realize very quickly is like if you get a lot of people watching your streams, some people are just freaking miserable, man. They're just genuinely like truly miserable people. And so like most people are good. Most people are nice. They're kind. They recognize that like I'm not claiming to be an expert. I'm not claiming to be a guru. I'm not selling a course. Like I've got one sponsor I plug a couple times each stream. But outside of that, I'm not being like terrible and unrealistic. But some people are just mad. Usually the biggest haters are actually people who have tried to be YouTubers before. If you ever see a hater and you click on their channel, you'll see that like I saw one the other day. He was like a slots YouTuber, but his quality of the videos were like horrible. And like, I'm not going to say he's not the smartest guy because he's been uploading to that for freaking years and it's just terrible. But he's not the smartest guy. And so, I think sometimes a mix of like low intelligence with insecurity and jealousy is what makes the toxic people come out. coming from the smartest, like, best looking dude on YouTube, I think that's probably true. Definitely top 3. Hey, thank you, Zen. Appreciate it, brother. I get my live news from a bunch of different sources. Honestly, if you want a good place to get it, just go to x.com. You can follow a lot of different finance news sources, like Financial Juice, great one. Market Squawk, another really good one. Like whenever I cover economic reports, though, like right at 8:30, I get them from different sources. I'm not really going to tell you guys how I get those, but there's a lot of different sources. Yeah, I know where Beaumont is. Humble much? Dude, listen, I recognize how humble I am. I know. It's hard not to be humble, but somehow I am. No, I don't have Bloomberg Terminal. It's too expensive. I could probably write it off, though. I've thought about getting it. It's like, what, $20-something thousand a year for Bloomberg Terminal. I could write it off, but honestly, there's sources you don't need. I mean, look, I like Bloomberg, but there's other sources where you don't need the terminal, and of course, anybody that spends $25,000 a year on something, it's the greatest thing ever, right? If I spend $25,000 a year on bubblegum, it's the greatest bubblegum of all time. I've never tasted bubblegum like this. My mind is going to convince me of that, regardless of whether it's true or not. It's why you see a lot of people that buy up these day trading courses, and they've spent so much money on mentorship, thousands and thousands and thousands and thousands of dollars, that in their mind's going to trick them into thinking it's the greatest mentor ever. It's the greatest course ever. It's the greatest bubblegum of all time. It's confirmation bias. Doesn't mean it's true, And so I could spend that much money on Bloomberg Terminal. I feel like I would regret it, and I'd end up feeling bad about it, Or you could just watch the streams. Yeah, for sure. Yeah, now we've kind of slowed down a little bit. We're not really moving much now. We're kind of choppy sideways. We're going to wait. See if we get anything good, but yeah, you want to know what works? Follow big money. What does big money not do? They don't invest in penny stocks almost ever. Like, they might invest in like high momentum $10, $12, $15 stocks that have proven themselves. They don't invest in penny stocks, pink sheets, OTC. They don't touch that stuff, Follow big money if you want to see what works. Big money's smart enough. They have resources. They understand what works. If you want to see what works, follow big money. One thing big money doesn't do, day trade penny stocks. And there's a reason, because the edge is so freaking low, I'm not saying you shouldn't day trade like a $7 or a $10 stock or a $15 stock. That's fine. I get that. I really do. There might be some edge there, and maybe I just suck at all of it. That could be true. But yeah. All right, so we're over the 200 exponential right here. We're at 19,920s. 19,920s. We'll see if we hold. But yeah. So here's the 200 EMA at 19,920. I'm watching that right here. I want to see if we hold. We got 4 minutes into the opening bell. We'll see if we do good, man. I'm waiting for it. I know, brother. I'm just loving it as the haters will not get your sarcasm. I know. So many people call me a narcissist. They say there's like a statistical correlation between people who can understand sarcasm and intelligence. It's one of the reasons stand-up comedians have a higher intelligence than a lot of other people, is because they recognize and understand sarcasm. And so when people call me a narcissist, I just assume that statistic is true, coming from the top 3 greatest ever, all right. GNUS, bro. Honestly, I've seen people mention GNUS for years. There's SOS, there's DRYS, dry ships. there's so many penny stocks that have gone to freaking zero and gone bankrupt that so many people got mad at me for criticizing. Like, there's so many penny stocks that I was like, hey, that's crap. And people were like, no, bro, this is the greatest stock ever. In 5 years, I'm going to be laughing at the bank. Ha, ha, ha. And now that stock is like bankrupt, went to zero. You know, crickets, never see those persons again, you know. But people get wrapped up in it. They see cheap. They want to be able to find something for cheap and make big money from it. The problem is that if it's too cheap, that means nobody wants to buy it. And so there's a reason for that. And so there's a middle ground there that you have to find in value. Like, mid-cap stocks can make you lots of money, or they can drop 80-90% in a year. And they're hard to figure out. All right, guys, so we just dropped under that 200 exponential. We got 2 minutes left until the opening bell. Can you explain how this inflation affected that much? Well, higher inflation's bad, especially in the landscape of the last 5 years when we've had massive inflation from 2020, lockdowns, supply chain restraints, too much economic stimulus and stimulus checks, quantitative easing, money printing by the Federal Reserve, and you know, all the stuff that happened in 2020 and beyond. We had inflation problems and prices have gone up 2 or 3x. So people genuinely fear inflation. And so even though the inflation metric was only slightly worse than expected, the market wants rate cuts, and higher inflation means less likelihood of rate cuts. Higher inflation means the Federal Reserve has to tread a little bit more lightly in rate cuts because they don't want to spike inflation more, because by lowering interest rates, it unlocks cheaper access to money, and when people spend more, businesses raise prices. And so they don't want rate cuts to make inflation worse. And so what this data report means is that the market is fearing that rate cuts are going to get pushed back even more, if all that makes sense, right? Like, that's why the market obviously is fearful of inflation right now. But I also think the market is fearful of economic weakness. I've heard stagflation a lot over the last few months. And to a certain extent, I would agree with it. Like, we're seeing recession and economic fears. They think the current quarter is negative for Q1 of 2025, especially according to the Fed GDP Now, which actually drops at 11:30 Eastern time today. I'm not going to be streaming for it, but watch Fed GDP Now to see if it influences markets at 11:30. But yeah, we got a lot of fears on both sides right now, but especially inflation, I would say. All right, guys, here we go. Here's the opening bell right now. GameStop at 22.20s. Nvidia at 111s popping up a little bit. Tesla falling down at the open, though. I want to put the 10-year up because 10 years follows interest rates. Let's see if we can, come on. 10 years down. 4.3% for interest rates. Market's falling down too. So far, at least. Nvidia's down to 111s. All right, so market's still falling here, chat. Market's still falling down some. I'm watching 850s. I think a lot of people are watching 850s now. That's the low of the last few days, at least. I think it's the low of the last week, too, but I might be wrong. I have to look back at a longer-term NASDAQ chart to figure this out. Let me see. Yeah, so it's the low of the last week. Yeah. So here we go. It's right around 845, really, is the low of the last week and a half.
Nvidia down to 110s. Nvidia falling down, Tesla falling down a little bit, Palantir falling down some as well. Yeah, I'm going to wait a couple minutes until the opening bell passes first. We'll switch to our actual funded account now, though. And we'll wait. We did just bounce at 850s again. Part of me really wants to short this, though. I'm going to try. It's so close to the opening bell. I'm going to give it a chance. But I got to be quick with my cut. There we go. All right, we just made about 25 from that trade really quickly, 22. I wanted to short there. Look at my level here at 885, and that level held beautifully. I'll take it. We'll see if we creep back down and crack this low now. This is the low of the last few weeks here. It's not at 850, though. It's at 845, 846. We're treading pretty close to it, too. I tend to think when we get this close, we're at least going to test it. But you never, like, there's always variance. It could go the other way. I tend to think we're this close. It's kind of like a magnet, though. We're at least going to test it. Here we go. There's the break. All right, so here's the test. See if momentum shows up. Yep. Let's see. There's 850s. All right, so there's 840s. There we go. Just broke it. Very predictable. I should have jumped on it, but it's very predictable. You got to think of, like, the closer we get to that level, the more it is like a magnet. And so the higher the likelihood that we test it. And so, yeah, we just broke the lows of the last week and a half just now. Down to 44s now. Now, it might tap it and rip right back up. That's possible, too. But all right, here we go. Now we're down to 840s. Still dipping. I remember I'm going to put a timer up. Look at that rebound back up. So we tapped it, broke it, popped right back up. All right, guys. We got the consumer sentiment data in 25 minutes. Look at this rebound back up in markets. All right, guys. So we had the PCE data release. It's out already. Almost here, guys. Almost here. Look at this big rebound back up. So we cracked that low and then squeezed all the shorts that jumped in there out. All right, guys, so we're gonna get ready here. Look at this big rebound back up to the 200 exponential. Yeah, here, I get the timer out. My bad. Here, hold on. We got 22 and a half minutes left. Or really, we got like 22 minutes even left. Here's the timer. Market's crazy. Yeah, so like we're kind of flat at this point in time, and I think the market's just kind of faking people out over and over again. We're slightly green on the day. I do want to short this move, but I'll give it a second here. So we're short. We'll take 2 contracts. Play a little bit more, but that's it. We're not going to hold this longer. I don't want to get a move up to the 200 EMA here and get stuck. Yeah, we're going to have to take half of that off. Give the other one a little bit of time here. It's a big rip. Market's going green. Yeah, so we're slightly red on the day, not much. We'll see if we get some opportunity here. We got the 200 EMA. We'll look at 930s, but I'm gonna buy this now. There we go. And we're out. So we just made that right back, and now we're green on the day again. Kind of going back and forth a lot, though. I thought we would pop right back up to retest 920s, and we did, but we're kind of struggling to get over this 200 EMA at 915s now, so. NVIDIA's honestly green since the opening bell, too. NVIDIA's up to over 112s. AMD's up to 106. Tesla's very weak. It's under 272s. It's at 271s right now, but a lot of tech stocks are green. We're just kind of going back and forth. I think I'm on one account I'm red, on this account I'm green. So we're kind of flattish on the day. We haven't really taken any big risks. Just not really worth it. I'll switch back to our challenge account that I think I'm green on the day. Yeah. We'll play with this one. Or no, we're red on the day on this thing. But we're basically flat. I'm going to short the 200 EMA and just hope we hold, but I'm honestly shorting against NVIDIA here. So let me cut this. NVIDIA's rising. Look at the NVIDIA go up. So I wanted to short, but NVIDIA's going up too fast. Look at NVIDIA here on the right side. I'm worried it's going to pull this up. Tesla's moving down to test lows, though. Palantir's breaking down as well. What else is moving down? Meta's kind of flat. Google's slightly green since the opening bell. Where do you guys think we go from here? Up or down? Listen in the chat. Put up if you think we're going to move up from here. Down if you think we're going to move down. Again, not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. I might be wildly wrong about anything. Don't copy me. Not an investment professional. We got 20 minutes until the University of Michigan consumer sentiment and inflation expectations come out. So, see what that looks like. Down. Looks like most people think we're going down from here. Look at that pop. So we are up here. There's 930s. Look at this green action. Something. Look at this candle, guys. Wow. Nvidia shooting up to almost 113s. I don't think there's news. MOO imbalance. Maybe the imbalance data. All right, so look at the big pullback. Yeah, Tesla rebounded back up to 274s here. It's a big push down here. I guess I'll short, but I think it's risky too, but we'll try. We'll add to it. There we go. All right, so we got ourselves back to green here on this account, shorting this big pop. Yeah, so today there was 74.2 million more in sell orders than buy orders for the S&P 500 stocks. Almost 30 million more in sells than buys among the Mag 7. And this indicates bearish sentiment this morning at the opening bell. I mean, I know that's not a shock, but there's more sell orders than buy orders today from high inflation data and more. So we're kind of testing. We broke the week and a half low, and now we're treading pretty close to it now as well. Yeah, it's a volatile. Today's going to be volatile, though, brother. Like, today's going to be very volatile just because of, like, stuff going on today. In 15 minutes, we got the consumer sentiment and inflation expectations report. So, like, it's going to be volatile today, man. That's kind of how it goes. And again, if you haven't already, check out Top Step. Top Step gives you a 50K demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for. This is only my third plug all day. And so I do 3 plugs in 3 hours. That's 1 an hour. Cry about it if you're mad. But honestly, it's a great way to learn day trading. Most day traders lose. If you put up your own $1,000, $2,000, $3,000, $5,000, $10,000 account, you're probably going to lose, right? Let's just be real here for a second. It makes a lot more sense to try this out. If you fail, you're out $50 for the base one. It's not the end of the world. If you pass the 50K challenge, you get a 50K funded account with a 90% split. You get to keep your first 10K in profit anyway. Very similar to funding your own account. Noticeably less risk. It's the best of both worlds. And they've paid out almost $200 million. They fund thousands of traders. If you use Top Step X, 0 commission. So this is 0 commission on Top Step X. Tiny amount of fees per trade. And so it just makes sense, guys. It just makes sense. Great way to learn. Although, again, they're an affiliate of mine. I get paid by them. So I am biased. Some would say I'm the top 3 most biased trader of all time ever in the world. If you want to check it out, there's the link in chat. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Not an investment professional. Will the market crack lows again, chat? Will the market crack lows? Let's see. Will the market test lows again? Let me know. Yes, yes. New lows, yes. I tend to think we will, but it depends on the market reaction to the University of Michigan data. We might not get any reaction. So the University of Michigan has 2 states. They released 2 weeks apart. One is prelim, the other one is final. Today's is the final report. I'm pretty sure. Let me make sure. I'm pretty sure today's is the final. Yes. Today's the final consumer sentiment. Last time showed up at 57.9. And so if we get a big amount over under that level, it could move stuff here. But who knows, man? Market's going up right now, so maybe we don't retest lows today. Nvidia is green, and it's been rebounding. Look at Nvidia bouncing back here as well. Tesla rebounding back up. Tesla almost going green on the day, too. Or green since the opening bell, I should say. It's still pretty red on the day, I think. Let me see. Actually, Tesla's technically green on the day right now, and it's trying to go green since the opening bell as well. Nvidia is technically green on the day as well. AMD, let me see if AMD is green. AMD's not green on the day. It's red. And so we got 12 minutes left until this report, and I'm wondering if the market's going to stay choppy leading into it. Santa's green today? Yeah. Part of me wants to short this little retracement candle here, but it's risky. We'll try it. There we go. Took half off. Small little piece. Took another piece off. There we go. Out. Just made $20. Some very quick little scalp, but I'll take it. Green is good. Oh, this is the combine. I should have taken larger size here. Hold on. I forgot. This is the combine account, so we'll just kind of YOLO it and see if we can get green here. There we go. Nice. Cool. Yeah, so we're up a few hundred in this thing already. We're at 5 contracts left. I'm going to get out the rest there. So, yeah, we're nicely green on the day here. Did the music stop? Not the margin call music stop. The actual literal music stops. I think so. Great movie. If you know, you know. Nvidia falling down a little bit under 112s, though. What's my top 3 indicators? VWAP, 200 exponential, and previous day's closing price are my favorites. You can also look at the previous day's highs and lows. You can look at the current day's highs and lows, obviously. All right, market's coming back up. All right, 10 minutes before the University of Michigan consumer sentiment data. PCE, I'm not going to say it is for sure, but PCE might be in big yellow right here, where it says core PCE year over year 2.8%. That might be where PCE is. I'm not saying it is, though. It could be. It might not be. But, all right, so look at this big rejection at 19.92s. Look at that flush. Wow, look at that red candle. See if it holds, though. Nvidia turned all the way down to a 111.70s. Please don't get too mad. I'm just messing with you. I try to stay relaxed when the market's open, so I use a lot of sarcasm. So just bear with me. Pun intended, I guess. All right, guys, we got 8 minutes. All right, guys, so look at this test. So we're moving all the way back down here, down to 850s. It's looking very bearish. And it looks very weak. This is the low of the last 6 months. Or, I'm sorry, no, that's wrong. This is the low of the last week. The low of the last week here. All right. We got the finalized consumer sentiment and inflation data. Oh, if I was Powell, bro, I'd be whispering so many market. I would wear a green tie or red tie. I would be using Bear With Me almost every day. I'd get a bulletin board. You know, I'd just be chaotic. I'd be nonsense is what I'd be. You know, I get red or green earrings and just wear those. You know, they'd fire me pretty quick, I think. All right, guys, market's testing these lows. Let's see if it holds. Fire Powell and hire me. It's a tough job for 200K a year, bro. I'm not saying 200K is chopped liver or anything, but like, it's a tough job for 200K. All right, guys, 5 minutes. Do you know your demographics? Well, I think women in trading are just, there's not very many. You know, there's some, but it's definitely not as much as men. I think it's like 97-3 or something like that. Demographics there. I think most people are U.S. based. Yeah. Most people are between the ages of 35 and 44. Based in the US. Watching from a computer. Probably trading live. Yeah, it's actually 92% men, 8% women. So we got a little 8% there. That's not bad. All right, guys, so here's the retest of lows here. We got 4 minutes. 4 minutes. Yeah, we got a couple of women here. We got Faye. I know we got one called Tiffany. We have Besh, apparently. Yeah, I see you guys. I appreciate your support. I'm rooting for you guys, you know. Or, no, I'm rooting for you gals. Sorry. Generic term, my bad. It's a habit. NVIDIA at 111. So NVIDIA just went red on the day. We're also testing the week low. The week low. Right here at 1984. 1984 is the low of the last week. Yeah, y'all. Yeah. I'll defend the use of y'all too. My stepdad was Canadian. I'd go up north to Canada to like Sault Ste. Marie in Ontario. Sault Ste. Marie, Ontario, Canada, Batchewana, Canada. And they would say use. And they would make fun of me for saying y'all, and I would argue with them and then just be like, look, you can't throw an S on you and make it plural, okay? Y'all is a contraction. It's you all, you know? I like Canadians, though. Canadians are cool. They're really nice people. Good food. Good culture up there. Beautiful country. I like it. All right, guys. Hey, we got 2.5 minutes here. 2.5 minutes. Yeah, hang out in the Discord. There's the Discord link if you want to check it out. I'll put the Discord link up. All right, here we go. University of Michigan, inflation expectations and consumer sentiment data, 10 a.m. We got 2 minutes left. 2 minutes left. I'm going to put a Discord link up just in case pawns doesn't work, which I can't really tell sometimes. I'm going to delete it just in case, and I'm going to add it myself. Join our Discord. Completely free. Doesn't cost a thing. Hang out with us there. 2 minutes, chat. 2 minutes. All right, here we go. A minute and a half. Chat, a minute and a half. Just trying to bounce back here. 1 minute. That was a fresh one. Yeah, I don't know, bro. All I know, like, I look at which one works. Like, does me posting at work or does it, you know, it's all good. I appreciate the support, Pond. The help, Pond. Appreciate it, bro. All right, hey, we have 1 minute left. We're still at that week low of 19,840. 19,840. And I think this data could send us over the edge in terms of that low if it comes in worse than expected. They're finalizing this report, which is that 1 year inflation expectations showed up at 4.9% versus the 4.3% last time. 5 years showed up at 3.9% versus 3.5% last time. So they both increased inflation expectations, and they're finalizing this in 30 minutes, either higher or lower. Michigan consumer sentiment expected at 57.9. And so this is the finalized version of this data here in 20 seconds, 23 seconds. And so again, we'll see what that looks like. But that is what we're showing up with here today in about 15 seconds. We'll see what happens. All right, 5, 4, 3, 2, 1, and let's see what it shows up as. All right, market's down. Higher than expected inflation expectations on both fronts. It did push us over those lows, as I said we might. Lower than expected consumer sentiment, higher than expected current conditions, and worse than expected consumer expectations here. So this did have an influence over the market. You can see it move. It honestly pushed the market down originally, and then we retraced right back up. But inflation expectations, chat, 1 year now 5%. Inflation expectations by University of Michigan. 1 year is now 5%. In the next year, they think 5% inflation. 5-year inflation expectations for March showed up at 4.1%. 4.1%, 0.2% higher than the 3.9% that they came in at the prelim numbers. And so the finalized numbers were worse than expected for inflation expectations, higher than expected for inflation expectations, and weaker than expected for consumer sentiment and consumer expectations. But the market has gone up from this report. I tend to think it's going to come back down, honestly, because this data was not good. But who freaking knows, man? Not an investment professional. It did bring us back under the new low of the last week, is now down here at 815s. Chat, at 815s. So it did bump us down under this. And look, here's the decrease now. So, what do you guys think here, man? This is weird. Yeah, look, here's the delayed response to this. This is what I thought would happen. I mean, the data wasn't good. Inflation expectations were higher. Consumer sentiment was weaker. But it doesn't mean anything, and there's always variance. But look at this. This is weird. And again, if you want to stay up to date with this stuff, man, hit the subscribe button. That's what we're here for, guys. Hit the notification bell. We appreciate it. I gotta short this, right? I think I have to, just based off of the data. Like, I'm doing it. I might be wildly wrong here, but I got to. There we go. All right, we took half off. We'll add to this too. There we go. There we go. All right, just made a couple hundred there. And again, guys, yeah, I mean, I'm zooming out here, and then I'm looking at this low right here, which was, all right, I'm sorry. Yeah, let me say, hold on. Let me go back. Okay, we're on the 24th. Here's the 21st. All right, here's the 21st. We're right here. So it depends on where you look at it. but all right, so we actually popped right back here too. Interesting. Weird. I don't know. This is a weird market, man. Data came in, and now the market is like indecisive. It doesn't know whether it wants to go up or down here on this report, chat. Hey, what's up, Frank? I tend to think we're going to come down here, but I don't freaking know, guys. Don't copy me. Not an investment professional. Again, if you want to day trade with me on Top Step, I'll put the link up one more time. Great way to help support the channel here. And look, here we're coming down. So again, if you want a place to watch this data release every freaking day, hit the subscribe button, hit the notification bell. There's Top Step. Top Step, zero commission on Top Step X, which is the platform I'm using. No PDT in futures. You can day trade the S&P, the Dow, the NASDAQ, the Russell, gold. If you're trying to learn day trading, do not fund your own account. It doesn't matter what your mentor guru says. Most day traders lose. It makes sense to limit your risk when you're learning and try something like this versus funding your own account, which makes absolutely no sense. Most day traders lose their first couple accounts. Try this first. They give you a 50K demo. If you can make 3K in profit without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split. You get to keep your first 10K in profit. That's similar to funding your own account, but if you fail, you're out 50 bucks. They paid out almost 200 million, and if you use Top Step X, there's zero commission. They're an affiliate of mine, though. I am biased. I get paid by them, so again, some would say I'm the top 3 most biased of all time ever in the world. I'll put the link up one more time, and yeah, let's see what the market does here. I tend to think it wants to come down, though. I tend to think it wants to come down, but who freaking knows, man? I'll stick around and let you guys see it, but I tend to think it wants to come back down. Just to clarify, it could certainly go back up. When I say it wants to come back down, I'm just, speculating. And anything could happen. The variance is so high right now that anything could happen. But there it goes. It's coming back down. So, when you're right, you're right. But I mean, it only makes sense. Worse than expected inflation expectations, higher PCE than expected, worse than expected consumer sentiment and expectations. So, I mean, none of that was good. High inflation, bad consumer sentiment, economic report. Like, that sounds like stagflation to me, and I think that's going to freak a lot of people out. And so it's not a shock to see us coming down, although the variance is always there. But, like, that's why you watch these reports. It kind of influence sentiment. Yeah, y'all be safe. Cracking lows. There's the break. Yep. And I think the closer we get, guys, the closer we get to the closer we get to 19,120, which is the low of this recent correction over the last few months, 19,120, 19,130, it's the low of the recent correction. The closer we get to that, the higher the chance that we're going to break that. Look, here we go, still falling. Look at this. Now down under 19.8s here, chat, 19.8s. Let's watch 775 to see if we find some support here, but I'm going to stream a little bit later today just because we got some stuff to cover here, and it's Friday. at this flush. All right, so we bought this, but immediately we're wrong. We got to cut that. Look at this drop here, chat. Wow. Look at the red. Catching a fallen knife on my challenge account here. We'll try to buy this up real quick, but man, it's risky. Here, now this is a challenge account, so we're green on our funded account today, but there we go. Better. That level held. Look at that. Cutting it out though. I'm getting out of that thing now. Oof. I don't want to get stuck in this red action. Nvidia cracking lows under 110s, guys. Remember, the low of Nvidia. Hold on. Let me get this out the way. The low of Nvidia here, chat, is 102.15s. We're at 110s now. So definitely a bloody market right now. Yeah, so again, we are gonna post here. All right, so we're still testing that 950 level. Now we're under 950s. Look at this red action. And this is what I'm telling people. Like, people say, hey, the University of Michigan data is going to be nothing. It's going to be a nothing burger. It's going to be all this different stuff. It's not. This is important data. This is incredibly relevant, important information. The market interprets it incredibly influential, especially because inflation's a fear right now. Right now, inflation's a fear. It's one of the things we saw earlier in the week with GDP coming in higher than expected, market going down. And so higher inflation expectations over the next 1 to 5 years is not good. And the market is freaking out on it. And look at this drop. So the inflation data is tanking markets now, taking markets. Inflation data came in at 5% for 1 year, and I think 4.1%. Yeah, 5% for 1 year inflation expectations by the University of Michigan. 4.1% for 5 year, and this is higher than 1 year was at 4.9%. Now it's at 5. 1 year or 5 year was at 3.9. Now it's at 4.1. Consumer sentiment and expectations were weaker than expected as well. And so this is all dragging the market down in a brutal way on a Friday. And the market's tanking right now. It's freaking out. So. Look at this drop, 19.71s, chat. Look at this decrease, man. Look at this. Inflation fear, stagflation, and rate cuts getting pushed back. Tanking markets here. Tariffs hitting next week. Yep. Is it time to buy? I don't know, man. I'm not trading against this trend right now. Even though I think there's probably, you can maybe take like, I'll take a small trade in a challenge account right now. But that's all I would do. I'm not going to, and I'm going to wait, to be honest, too. Would you guys rather me keep streaming a little bit later every day like this? Like, I could probably stream until 10:30 during the days. If y'all would rather me do that, cover stuff like this, let me know. I usually cover economic reports, like that's what my channel's about, but I do trade live too, so. I will take a 5 micro contract position here in my challenge account, which is a very conservative position here, and if it breaks lows significantly, we will cut it and just not worry about it, since it's a tight risk and we got a really obvious risk level here too. Don't copy me in this trade, please. Do not copy me in this trade. It's a challenge account that we're already up over $1,000 on, and so we can play with this and not worry too much about it and see if we whip up real quick based off of extension, but do not copy me in this trade. I mean, I don't ever want you guys to copy me, but definitely not in this thing, man. Yeah. I just want to see if it cracks lows and then retraces back up, though. That is something I'm looking for, is like a liquidity grab at these lows from shorts jumping in. But we'll see if we get it. There we go. There we go. I'm going to take this opportunity to limit size. There we go. Okay, took some off again. Little baby trade now. I don't like this test. I'm out. Kind of a flat trade, to be honest. Like, we got a pretty neutral here. Look at the NQ. Look at this candle on a 4-hour chart. This is the candle on a 4-hour chart. Looks like I got out for a nice little exit there without risking too much. Now we're running into, I got a 690 level. Let's see if it holds. It held. I'm copying. 690 held. Honestly, I don't know where that level came from on my charts, but it was there. Look at that. All right, we'll try it again. If we're not having fun trading this thing today, what are we doing in life? Alright, we're in max size in this account. For you guys, you're welcome. Took most of it off. 20 contracts now. Now we just got 5 left. We can hold the rest break even. Yeah, get out there. So we made money from this trade, believe it or not, but now we're out. I think the edge is kind of pivoted from short edge to long edge, though. I'm not telling you to buy it because there's always a chance that it just dumps down underneath it, and it is trading against the trend. But I think you get like cheap entries on the long side now, but there's always a chance it keeps breaking down. A lot of stuff's really red on the day too, so. WP, what is that? All right, we're too close to this 690 low for me to take any trade here, unless it's going to be short, but I'm not going to do that either. It's too close. I think we're going to crack this low real quick. Maybe not, though. Yep, there we go. Crack the low. Still looking red. Nvidia just dumped down. I think it broke lows. Let me make sure. Yeah, Nvidia just cracked lows. 109.80s is the new low for Nvidia. Are we gonna break it again? We got really, really close to it. I think Nvidia is influencing this right now. Nvidia just broke it again, 109.60s, the new low for Nvidia. Y'all be careful, man. Netflix testing lows. A lot of stuff testing lows. Nvidia's falling down. Is he really, Frankie? What time? All right, so we're under sevens. We'll play with this here, but I gotta be careful. I'm gonna get out there. So we We got out basically flat there. We bounced right at the 690 level that we looked at, but a lot of it's so weighted towards what NVIDIA does here. It's kind of like a line in the sand. I still think it'll probably go up, but who knows? Did he really? Billy, did he really pardon that guy? I mean, that guy got in trouble because he pushed a truck down a hill, videotaped it, and said that it was his EV technology driving it when really it was just kind of rolling down a hill. And so I don't know whether I'll watch that stock controversy happen when it happened. This was years and years ago. But that's strange. I'm gonna buy this dip. It's kind of risky, but like I think we've broken down so much. There might be some edge here. We'll see if we get it. It's a challenge account, by the way, that we're already up thousands on. So like we'll take our little risk here and see if we get something. There we go. See, we got 5 contracts left. See if we can add to it now. We got 2 left. I'm gonna cut this now. So we made a little bit on that trade. And now we're out. NVIDIA's getting really close to that low at 109.60 here, chat. So well, he had a public company, a public EV company. It was called NKLA. It was the symbol. And he did like a promo video for the company in which he pushed it down a hill, basically. Trying to artificially inflate the price of the stock. And then they caught him doing it. And he ended up getting booted out of the company and charged with fraud. And then like a bunch of stuff happened. Alright, so here's NVIDIA getting ready to test lows again. I was wrong about my upward direction. I thought we would go up. It looks like we're continuing to go down, man. Honestly, the closer we get to this level here, chat, this 178, I think it might be 178 or 120. Like the sketchier and sketchier it is. And so that's why I'm streaming a little bit longer today, just because we got a lot of craziness going on. At 11:30, we also have the Fed GDP now. GDP expectations for this current quarter. All right, so there's 950s, 650s. I mean, that's a level I have on my chart, but I think the momentum is kind of heavy right now too. This looks weak. Ball stick from the Fed will speak just before market close. Alright, so we did bounce at 950 or at 650. It's a big candlestick down, but somehow we're making money going long in this really big bear market. I don't know how. I'm just attacking these level support bounces. Like what I'm basically doing here is like you can kind of see these levels, and these levels are honestly holding pretty well. Like we move down, we might rebound back up. This is the long I'm taking, and then I sell right here, and then it might continue down, right? But if it stops for a little while at those levels, I can kind of scalp a quick little bounce. I didn't try it on this one, but that's essentially what I've been doing, and it's been working okay. I have 600s, 19.6 right here. You can see it on the chart right there. But who knows, man? It might stop at 625s right here. Sometimes it'll stop at like quarter increments. So it could stop it right here, somewhere around here. It could stop anywhere, really. You don't really know. But the next one I have on my chart is 600 basically. Man, I gotta pee, bro. I'm gonna wait. But still, man. The market's too exciting to leave here, man. I gotta wait. But man. Nvidia cracking lows again, down to 109.33s. PCE. I like it. I like it. All right, guys. Hey, we're at 625s right now. 625s. All right, so we're seeing a big influx of bull sells or buyers stepping in. See if 650 holds resistance here. Look at that. Oh, I guess not. Look at that influx of sales or buys coming through. All right, guys. Look, it's been a good day. It's been a Friday. Yeah, it's been a good day. Look, I think I'm going to let you guys hang out for the rest of the day. I'll see you guys a little bit later. Y'all be safe today, man. The market's kind of crazy and sketchy, and just be careful, bro. Again, y'all be safe. Market's breaking down. We're getting ever so close to that 19,120 level, which is the low of the last 6 months. 6-month low. Let me make sure it's that same level. I'm pretty sure it's 19. Yeah, hold on. It is 19,139 is the technical level. 19,139 is the low of the last, like, it's the low since September 12th. So September 12th. Yeah, it's the low of the last 6 or 7 months. And so as we continue to break down here, we're getting closer and closer to that level. And I think it's kind of like a snowball effect where the market's going to keep falling down. So y'all be safe. Listen, y'all be good. Yeah. I'm giving you a shout out. Andre said you called the trap. Oh, that's cool, man. Market's fleshing. Yeah, y'all have a great day. Y'all be safe. Remember, guys, listen. Market's a little crazy today. As we get closer to that 120 level, market can be sketchy. Y'all be safe. All right, be safe in markets. I'll see you guys later. Y'all be good. Have a great day. Be safe in markets, guys. I love you all. You have a great day. If you want to check out Top Step, link is in the description. And next week, guys, let me hype up next week for a second. Next week, we have the JOLTS job report. We got manufacturing PMI, ISM and services PMI. We got Tesla delivery numbers. We got non-farm employment change, jobless claims, unemployment, non-farm payrolls, unemployment data, and Jerome Powell. And tariff day is April 2nd. All of that stuff happens next week. We're going to stream it all live on stream. Market's getting hella weak. Y'all be safe. Y'all be good. Be careful. I'll see you guys later. Y'all be good.